Volatility in their first share sale since going public in 71. That had $100 billion of demand. Shares are trading down in the pre-market. What gives? I think there is a finite point where CapEx is not always good, right? I think in the case for Intel, they need it. They need to grow the foundry. They're trying to be more productive and more competitive by offering different product lines than what they did before. At Dan's point, now they're evolving. The technology is growing. They're being more innovative. That requires capital. But there is a point here where this market has been almost flooded with so much opportunity. The SpaceX IPO was gigantic. We just had another 900 million shares hit the street or become available, from insiders and that kind of stuff. There's another $20 billion offering. NVIDIA is going to offer $500 billion of liquidity for all this other stuff. I think there is a saturation point for investors where they go, okay, uncle, I'm not sure what to do. I'm just going to sit on my hands here and figure this out. And again, for us, it really is a point here where you have to know what you own, know why you own it, because there's opportunities out here. You're getting some volatility finally. It used to be the last 3 years, the volatility just went one way. So all you had to do was say AI and CapEx and an earnings call and your stock went up, right? And now it's a competitive environment. We're finding winners and losers, and that's the moment that we can really make our bonuses as the winners. So let's talk about the word here that we haven't really said yet, which is inflation. All these prices going up. On this topic, we're getting CPI data tomorrow coming after a really negative jobs report on Friday. Yesterday, our Fed correspondent Jen Schonberger spoke with Cleveland Fed President Hedging, talking about this exact thing. What's the Fed going to do? Take a listen to that.
What I can tell you from what I see and what I hear in the district is that I'm not feeling that restraint. And with inflation having missed our objective of 5 years, it's really important that we're able to bring it back down to that 2% number. I don't prejudge it. I don't know exactly where we'll end. I would say in general, 125 basis point move probably doesn't do a whole lot for the economy. So it's probably, some number of movement. I don't prejudge it.
Yeah, he doesn't have to. Yeah. Market still pricing at least one by December. When you get one, usually you get a cycle. It's not usually a one and done. What are you going to be looking for in CPI tomorrow to tell you how he's going to be feeling, especially since we've had such little communication around the reaction function and how he thinks about it? Well, and it really all comes down to the core, right? It's the core inflation, the core CPI, and the core PCE that are going to move his mind at this point, because that's the real impact on consumers, right? We've already seen the volatility in energy. We've kind of been on a roller coaster with oil prices that's happening again this morning. All of that could be subsided in a couple of weeks. You just don't know, right? So it comes down to that core figure. How much of
good morning
costs are getting passed through to consumers, I think is the biggest thing. To Dan's point, ChatGPT just lowered prices on consumers. That's right. Facebook is now undercutting, a lot of prices on the enterprise scale. So there are cost structures out there that could show you that things are getting better. I think the biggest thing is going to be
okay. Hope everyone had a good evening. My back is bothering me. I gotta get out of this chair and exercise more or something. Morning, everyone. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Tuesday, August 11th. Brent was late today. Let me see if he updated yet. Still Monday. Let's see if he updated. No, still no update. Okay, he must be running late today. Nothing much has changed. I mean, if we look at the markets, you can see we're up a bit, back up to yesterday's high, basically. If we look at the trace map going out to next week, Brent did this as well. Let's look till Friday. Going out to Friday, looking at GEX. For whatever reason, something's not working here. Okay, maybe his site, maybe the data feed is off or something. Okay, let's look at today. Zoom out. Okay, so we're pretty, you can see a pretty definitive area. Okay, non-zero day. versus 0-day.
That takes a long time. It's not, it's not just putting up a warehouse and then stuffing it with a bunch of, IBM computers. These are massive developments that need to take place in order for them to build out their data centers, and they're full of memory. I mean, it's incredible. And so, companies like Apple, companies like Microsoft, for instance, they had to raise the price of some of their power to $500. The Sony's, the whole gaming space is really upside down almost because of how far prices have increased. And so, it's unlikely that that's going to change. I think for the next few years. Pick up the smartphone, the laptops you can change pricing. Smartphones, it's a little different. You don't really hear Apple saying, "Well, here's a cheaper iPhone," unless it's got fewer features. On the gaming front, I think you can go generation by generation and change pricing there. But I just don't see this. Unfortunately, especially for me, I love all this stuff. I want to buy it all. It's not going to change. And I swear, if TV prices get more expensive, I'm going to lose it.
You're just not gonna buy one.
Oh no,
But bringing it back to the journal story we started on, part of this is that AI stocks doing so well. Household net worth is going up.
Okay.
Do we get out of that cycle?
Well, I mean, as long as asset owners are comfortable and they keep spending the money from the growth of their assets, I really don't think that this is an income disparity discussion anymore. It's whether you own assets or you've not in the last 5 years, right? If you own a home, you've done pretty well on it. If you've owned a nice basket of stocks, you've done pretty well on it. The S&P's up 90% in the last 3 years, right? So it's really about people feeling that wealth effect and continuing to be confident in their spending. Something would have to change there in order to make those people uncomfortable. It's just not there.
Yeah. So let's take a final topic today, a bit of a quirky story on this, looking at maybe a market that could be for the retail traders. So we got the news that the Truth Social Truth API, which is basically early access to an API of President Trump's market-moving Truth Social posts. They've had, and I quote, more than 10 signups. Most of those have been high-frequency trading firms. And look, if you're Jane Street, or you're 2 Sigma, or you're DB Shaw, fine. You want millisecond access to a post about Intel that's going to pop the stock or send it down by 5%. Sure. But this is $60,000 to $100,000. Is there ever a market where this is something the retail investor or even the top retail investor is talking about?
Okay, let's get ready for the opening bell. We've got 7 minutes to go. 7 minutes to go.
I think transformative is that information and getting it earlier. I don't know. I mean, if these firms only gigantic returns because they have this early access, then the investors will vote with their wallet. They'll follow. They'll say, okay, I guess there's some real value here. But unless they get to that point, right, then I don't think that there's really a there. I mean, it's just one of those things. You've got to prove it with the math as far as we go to get us interested in something like that. I think I'll pass it.
So Zach's not buying the Truth API.
We're pretty darn good at research, and I think we'll stick with our own.
Yeah, no, fair play. But it's the president has, regardless of who it is, has always been able to move markets. That's the truism of the presidency. President Trump seems to treat it as a feature, not a bug. And I wonder what that does to the market when you have someone in such a powerful position willing to step in, and especially someone who we know indexes a lot of how he thinks about his own performance to the stock market. What does that do when he's not only willing to step in, but now selling a little bit of a head time access to a certain class of investor when he's going to come out and say, I love Intel, this is a great investment, or we are taking the DOD is taking a stake in FD Materials.
Yeah, I mean, at least
We got 6 minutes to go.
Yeah, and again,
Okay, we have, let's see.
So, I mean, it's just simply how politics are. It's in your face, it's loud, it's public, but at least you're going to hear about it and know that, and you can obviously assume that he's going to be propping up U.S. stocks and the U.S. stock market because that's what he's all about. That's what.
Okay, so we see the range that we have here, 77.50 up to 78.10. Okay, we got 3 minutes, 50 seconds to go. Rocket Labs pushing a bit higher. Had earnings last night. If you sold an iron condor or call credits or put credits, you're probably going to be happy this morning. Futures, we're still up 14 handles at the moment. Palantir popping here. Palantir popping. Okay, let's see what Palantir is doing. ELTR, Palantir. Okay, so we're looking to get back above yesterday's high. A little over a minute to go. Okay, let's see. ASML, these stocks are higher this morning. Looks like tech is going to run again today. ASML, CoreWeave. Okay, these look pretty good, actually. Let me just post this in the room. Okay, we're about to open. Just move that out of the way. ASML, CoreWeave. CoreWeave looks pretty interesting. All right. CRCL on the move. Okay, CRCL, Circle, Internet, higher. Let's see, Rocket Labs have calls in this one. Okay, NVIDIA making up for yesterday's losses at the moment. It has faded to start the week. Need to get back above the 60-minute 20 EMA. Up down volume looks like yesterday. All right, there goes Rocket Labs on the move. Rocket Labs. Oh boy. Okay, Rocket Labs on the move. Okay, yesterday's close is right here. It's right back up to yesterday's close. So anyone with puts losing on that one. New York Fangs are mixed. S&P is losing a bit. We lost about 10 handles so far. Okay, Circle, Internet, Circle. Gapping up. Palantir back up to the highs. We're backing off of yesterday's high. Okay, Circle. Let's see what else is working here. NBIS, Nebius Group. Trying to break out of this base. Nebius will pass on that one. ASML makes the machines that makes the chips. Trying to break higher. It's above the 50-day.
Financial firms sort of securitize all of this and create this kind of asset class for this. I would say that unless we look at Stanley Jeffries, just some basically saying that because they are saying that the decision making is still a falls on the burden of the institution. So, as far as NVIDIA is concerned, that it does have limited exposure because it has the option to back that 25%. So there's a
Okay, S&P still fading right out of the gate. Palantir pulling back in a little bit. Palantir. Okay. See, Oracle's down 2%. Oracle inside of yesterday's price action, the lower half of yesterday's price action. Sky, SK Hynix got a bid. SK Hynix with a bid. Intel did gap down, looking for a bounce here at the 21-day. ARM Holdings, inside day, ARM Holdings. All right, so the top 10 on the NASDAQ, Nebius, ASML, Teradyne, SanDisk, Mercado Libre, Clack, Constellation Energy, Seagate, NXPI, Applied Materials, mostly tech, HONA, Honeywell Aerospace, coming out of a base. Honeywell Aerospace. Let's see, KLAC, inside day. SNDK. Trying to turn back up, SNDK. Micron. Okay, Micron doing what we laid out a few weeks ago. As Micron started to fade, we were looking for it to base at some point and turn the corner. Micron. Let me look back at Rocket Labs. I have a interest in Rocket Labs. Okay, that's just sitting here doing nothing. It's at the 200-day, 50 days turned down, looking for higher highs, higher lows. Let's see what they have to say on Rocket Labs earnings. Okay, they're still making earnings growth of 38.5%, 62% revenue growth. They missed earnings. They're off by 8 cents. They were looking for being off 3 cents. Okay. Another fantastic quarter. All right. So there's a lot of CapEx in building rockets and testing them and stuff. So we achieved a record 234 million in revenue, up 62%. Their expenses outweigh their earnings. In the profit and loss statement. But I like what he's saying here. Q2 was another fantastic quarter for Rocket Lab. Okay.
We've been talking about since the beginning of the year, hoping and praying and wishing more market growth. We've been asking for it the last few years, right?
The futures look like they're going to bounce here. Let's take a look at Trace. Let's see if Brent updated this yet. Okay, he finally updated. So levels that we're anticipating. Positive gamma. selling calls into and around 7,800 for resistance. Okay, that makes sense. Okay, let's look at Trace though. Okay, we're sitting right on top of support, 77.50. All the New York banks are down at the moment. Let's take a look at junk bonds and see what that looks like. Junk.
Been doing this long? Great. Hey, Chris, there's room behind you if you want to pass this chair.
High yield corporate continues to stay above the 50-day and trending. The 10-year yield inside day, it's neutral to slightly bearish for the IWM only, IWM. And some small cap tech stocks that need to refinance debt at higher rates. They need the 10-year to drop back down towards 4.5, 4.4%. All right. Looking for a bounce here. Okay, let's get S&P. Now let's see. We need to see our hedge flow line starting to turn up. Okay, that's non-zero day, 0 day. We're kind of locked in right in this area. Non-zero, 0 day. Rocket Labs. Okay, let's see. All right, so this looks pretty good. I'm trying to get a bounce out of this right here. We might slip a little bit lower. The New York Fangs are still showing some aggressive selling. Okay, so we're right up here we're right up against the double top. All right, we need, it's just the opening range right now, but we are drifting a bit lower. So, okay, we're in this area now. Let's see what net open interest looks like. All right, we're losing a little bit here. Next level is 77.25. 77.25. Okay, Hertz moving higher, Hertz. What is Circle doing? Circle Internet. Oh, coming out of a squeeze. Okay, so circle, let me see what I have here. Circle. Okay, this is up a lot. Circle. I'll push these out. I'll sell these and buy something further out. Circle looks good.
From a public equity market standpoint, I don't think the market needs it per se to keep the rally engaged, but it will definitely be another element of a gut check or sentiment check on the AI cycle.
Circle. All right, so what do I want to do here? We got earnings behind us. Okay, so let me do this. Let me look at circle. Circle. Okay, we're above the pre-market high right now, so I'm watching that. Circle. Okay, so we got Friday, we got 1,500 of these so far. Okay, August. Let's go out to October. Let me just do this. Let me do a query.
So the industry was sort of anticipated, okay, it's going to be SpaceX.
I thought Circle already reported. No? Circle. Just shows you AI. It just shows you AI is not correct. All right, so I was looking at Circle just now. Okay, I'm looking at if there are any big flows, volume versus open interest in options. It's telling me that ahead of Circle earnings tomorrow. Well, I just asked it. So there you go, right there. Already reported. While the volume is still high, options volume and open interest remain heavily active today, not because of upcoming report, because the market is aggressively trading the post-earnings buy the dip reversal. Bottoming catalyst. The stock is gathering momentum, confirming a bottom. Okay. Okay, circle. All right, let me just do this here. Circle.
Most dispensaries don't give a how their product makes you feel, but food and benefits experts analyze lab tests on every strain and utilize the entire plant to curate the perfect food just for you. Personalize your great mood and get 20% off.
65, 67, 50.
If you're broke, and I mean dead broke, then you seriously need to listen up. These stocks is my absolute favorite right now. No joke. I just won $860 in real cash. I'm talking about actual money in my account. Don't sleep on it.
All right, circle turning. Okay, let's take a look at what's actually moving in the markets at the moment. We've got 320 stocks advancing, 55 on the Qs, 322 on the S&P. Core 1M is 858, so this is a bullish day. This looks bullish. All right, this is bullish. All right, look for a bounce. Core 1M's above 8. Okay, circle on the move here. It's at the 50-day. S&P is bouncing. Rocket Labs. Okay, let's see what Rocket Labs look like. Rocket Labs. Still hanging out here. Rocket Labs. Hertz on the move. Cheap stock, Hertz. I have the 250 call. Hertz, I have the 250 call for September. 250 call for, oh, I'm sorry, the $2 call for September. That's up quite a bit. Hertz on the move. Okay, S&P is on the move here. Okay, S&P looks like it could get to 7,800 maybe. All right, let's watch the S&P and see how this is doing. Okay, it's 10 o'clock. Pre-market high is just above for the S&P. Circle. Pre-market high, opening range high, breaking out. Okay, ASML is the top of the NASDAQ 100. ASML, pre-market high, above pre-market high, opening range high is just a bit higher. Okay, let's see what else is working here. SK Hynix, SKHY. Pre-market high, it's hugging it right now, that purple line. Okay, Meta on the move. Meta. Opening range breakout on Meta. Okay, Meta with an opening range breakout. It's above the 50-day. There's a lot of talk about all the money that's being spent. Was it 500 billion financing? That's what NVIDIA is looking for, 500 billion. Jeez, that's crazy. Meta looking good. Opening range breakout, worth a shot. Tesla on the move. Second that. Looks good. All right, New York Fangs are starting to catch a bid. Microsoft, Apple, Amazon, shorts covering. Meta looks like it wants to keep going. S&P 500. Looking for a follow through. S&P. Looking for that hedge flow line to start moving higher. Okay, we got support here. Positive gamma. Positive gamma above. Negative gamma below. So we got a nice bounce off of that negative gamma zone. 0 day. Let's see. Let me zoom out a little bit here. Okay, let me zoom out. Go back to 9:30. 9:30. Okay, coming into now. Hedge flow lines moving higher. Okay, we got Meta and Tesla looking the best on the New York Fangs. There goes ARM Holdings. ARM Holdings. SK Hynix. SK Hynix going here. Okay, opening range breakout just overhead, SK Hynix. Riot. Riot. Like. All right, Tesla. All right, let's take a look at Tesla. Or TSLA. Okay, that looks good. Tesla looks good. We've been looking for this to follow through. TSLL. TSLL. Let's look at 60-minute. Okay, we're through. The next level is about 910. 1070. If we get up to this level, we got about $9.10. $9.10 back to this level here. Okay, so you're right about here. Right around $9, $9.10. Okay, so that's that. Riot. Circle. Opening range breakout on Circle. Looking good through the 50-day Circle. Okay, S&P looking for more upside. Meta cruising higher, so is Tesla. Snowflake waking up. Broadcom waking up. Broadcom trending. Circle looks good. Circle.
Farm fresh flowers and plants right to their doorstep. No middleman, no wilted seeds, just bigger, better blooms. Month after beautiful month. You pick a date and we'll send the blooms for holiday delivery. With 10 unique subscription plans to choose from and zero commitment, Bloomsy Box makes any day a gift for yourself. Subscription order today at bloomsybox.com. MSGY may rest in 10 seconds.
Rocket Lab. Let's look at Rocket Lab. Okay, nice little pop here. Starting to turn back up, Rocket Lab.
WXN, AIHS.
CRCG.
ELAG,
CRCA.
AIHS.
LAG.
ELAG,
LAG multi-LAG.
ARTW,
ARTW.
ELAG,
LAG.
Circle, Rocket Lab, CRCL, Circle looking good. Wow, that's going. Circle is going.
That's our today's top trending kickers. We are watching Riot Platforms and On Holdings. That's behind the brand On Running. Joining me now is Dave Conley. First up, Riot Platforms. The shares of the Bitcoin mining company are surging this morning following a Bloomberg report that the company secured a $9.1 billion cloud deal with Anthropic. What are you hearing about this? What's the street's reaction?
20-year deal, $9.1 billion. Let's put this in some context. Riot started its life off as a Bitcoin miner, essentially buying data center infrastructure, buying land, buying power, buying electricity, and using that to turn energy into Bitcoin. Now it's redeploying that sample, turning energy into compute capacity, into AI infrastructure, which now is, I suppose, the better business to be in, and certainly how the market is valuing that. Shares are up 10% today. This really is the story of the value of electricity. For a long time, that was Bitcoin. Now, if you can sell that energy to a company like Anthropic, that's going to be great here for your perception of the market. And this comes after Anthropic has already signed several of the same deals. 10 billion, 45, 9 billion now. You see the trend.
And also, there's a lot sort of qualities also make this sort of pivot as well. And there's so many companies out there who have done this.
MSGY may resume in less than a minute.
To date, Riot are up.
Okay, Circle's still going here. Circle looking good.
Street and it was here from Joanna Kim over at TV Tower, saying specifically strong revenue growth continues to come at the near-term margin pressure. Of course, this company getting into international expansion, also weight loss offerings, AI, all these factors weigh.
Okay, circle. Let me go out and see where there's options. People interested in the money. Okay, I got some in the money. 60 deltas for September, the 70 strike. Okay, what's the ATR on TSLL? Looking good. So far, so good. Looks good here.
Doesn't come through. You just dumped all this money into developing that technology, setting a market for it.
Looking good there, Ursel. TSLL on the move. Our RSI is starting to get overbought a little bit. TSLL looks good.
May rise in 10 seconds. And so I was thinking as well, and so it'll be interesting to see how it plays out, of course, the longevity of how much this while the market holds on. All right, let's take another one, because from weight loss.
Rocket Labs.
Despite to chat with the co-founder and CEO this morning, David Alman, and I asked him, I said, be disappointed from the street.
Circle. Okay, what do I want to do with circle here? Circle. Okay, S&P no follow through. S&P. Off. Poet. Rocket Labs. Hertz. Okay, Hertz making more progress. HTZ, Hertz. 60-minute 20 MA on Hertz. Looks good. Excuse me.
Our market is the runner who wants
Airbnb looks good. Watch Airbnb. Intel. Okay, bought some Intel yesterday on the dip. Looking forward to catch a bid. Still hasn't seen daylight yet. SpaceX. Let's see what SpaceX looks like. SPCX, SpaceX. SpaceX is trending as well. NVIDIA. Back above the 20 EMA. Tesla. Looking good. Bloom Energy. I was really impressed with what they actually do. Bloom Energy, Oracle. Okay, these look pretty good. They're trending. Nike. I got a losing position on Nike. SPY, looking for SPY to trend. Okay. Circle's still going here. I need to buy some further out here. Circle. I'll wait for the dip. Okay, circle looks good. Circle looking for a dip back to VWAP. Circle. It's opening range breakout. Very obvious. Okay, circle starting to see some profit taking. Okay, Hertz is on the move. Let's see. SpaceX. All right, S&P, still no follow through. S&P, what are we doing, S&P? Spiders. Okay, we're still grinding along the 20 EMA on the 60-minute. Looking for a pop towards 775. For the last Monday, Tuesday, we haven't been doing much. Yesterday, we kind of went sideways. Friday, we didn't do much as well. Let's look at the Qs. Okay, Qs testing the 20 EMA. IWM. Looks a little better, actually. What's the 10-year doing? 10-year yield. Okay, it's hanging in there. Junk bonds. A little better. Junk bonds have been trending higher. That's good. High yield corporate has been trending bullish for a while. Okay, Palantir bouncing. Palantir, another one. Okay, Palantir.
Seeing shoppers reassess and make those changes. We're also interestingly seeing home sellers kind of reassess what's happening in the market. July housing trends data shows new listings, which are homes that have just come on the market by homeowner sellers. New listings were flat in July, and they have been increasing on a year-over-year basis for the previous couple months. So it's not just buyers that are reassessing; we're also seeing some reassessment from sellers, and that's translating into less dynamic housing market. Fewer sales in July, we were likely to see some.
Our Palantir is looking good. Okay, we're right at the 10 EMA, bouncing. Okay, let's see if we can't follow through here. Intel's looking good.
We found that has more than doubled since 2018, which is 1.5% so far this year. For these, though, for these residents who are now near these newly built data centers, they're not necessarily seeing their home prices change. Walk us through that dynamic.
Yeah, that's right. So we took a look at where home sales are happening around data centers. I mean, you can't deny the fact that data centers are expanding rapidly. We're seeing more of them in more different places than they have before. And so people who maybe haven't contended with this are now finding themselves questioning what is going to happen if a data center is to come into my market. And the good news so far, at least from a housing market perspective, is that we don't see a lot of differentiation between home sales and home prices.
Okay, what else is working here? Palantir looks good. Airbnb had earnings recently. Okay, that needs to hold up a little better. Okay, Oracle. Can you just get back above the 20 EMA?
Roughly in line with the home price trends that we see in those nearby housing markets that are matched to control for that data center group. So so far at least, we see that when data centers come in, there's not a whole lot of differentiation with those nearby homes. So homeowners don't have to worry about a data center coming in. That said, we are seeing data centers expand into different markets than they have so far. So they're now pushing into more rural areas that have lower incomes. And so this is definitely something we're going to keep an eye on to see if those early findings of no major impact from being close to data centers hold, or if this is something that consumers want to pay attention to.
Danielle, do you think it's a matter of the awareness simply not being there yet? Because Wall Street Journal had this interesting report out saying that in one town in California, these residents are protesting this $2 billion Amazon data center
because it was approved without any public meetings or votes. Do you think that that lack of awareness of these data centers being built is simply not showing up on, say, the housing market as well?
I think it's a good question. I mean, I think that there are more sites now that kind of track this data and make it available. I do think it's part of the consumer discourse much more so than it has been. And it's a question that we are hearing more and more from agents and consumers, which is one of the motivations for putting together this report. So I do think people are thinking about it. I think they're not sure yet how to value it and how to price in those effects. So far, we're not seeing a big impact, but this is definitely something we're going to watch moving forward. The number of data centers are increasing so much that it's going to be a bigger question for more people moving forward. And so we're going to keep an eye on it.
Danielle, when you think about a potential home buyer who maybe is finally got the offer, they finally accepted the bid after 5 other offers, they got outbid, and now they realize, okay, this is going to be near a data center. So there's so much concern, especially heading into the midterm elections, about what this means for the cost of water, what this means for the cost of electricity. So what would be your advice to a potential home buyer who realize that they're one of these potential home buyers who could be in this boat?
Yeah, so right now, I would say the evidence suggests there's not going to be a major impact on home prices, not going to have difficulty selling. We see transaction activity kind of continue in these areas near data centers. And those are the big ones. You don't want to buy a house that you might see loses value, and you don't want to buy a house that you might not be able to move out of one day. And so far, at least, those worries don't seem to be founded. There are other considerations about the general cost of utilities and water and those sorts of things. And there is a lot of federal agencies and state and local governments to try to address that, make sure that data centers are paying their fair share so they're not disproportionately impacting consumers in those markets. So for first-time home buyer in that situation or a home buyer in that situation, so far at least the data suggests that you'll be fine, that you can go ahead and be confident in the value of your home if you're making a purchase in a data center. And we'll continue to monitor this moving forward.
Danielle, I just want to get your take on another side, maybe this AI build out. We're seeing more and more AI. We work for these AI startup companies, make a move to San Francisco, and that is significantly increasing the rent. That's having a direct impact. We're seeing them even be able to put down a full year payment for the.
All right, what's Datadog doing? Datadog, we took some Datadog off into strength yesterday. Okay, looks like the bounce is going to get bought. Security stocks, Zscaler, all these were, okay, that looks really good. Palo Alto. Okay. Palo Alto. Zscaler. Datadog. And CrowdStrike. CrowdStrike.
We are seeing down payments remain elevated in the Bay Area. It takes cash in order to compete and stand out. The market is still pretty hot because of the interest of workers that want to be part of this tech breakout for the areas.
A trend to watch for sure. Danielle, thank you so much for bringing this out.
Thanks.
It's coming up. One Fed governor will help keep inflation. We'll break down what exactly that is.
That's not even the best part. It's winning with the crew, live online. They're not slots, with exclusive packs, double down on casino classes, play with your favorite streamers, James Harden. Sign up and claim up to 750,000 gold coins, plus 65 free sweeps. Our prize free, online, and you get your apps. Winning friends.
That's involved in the website.
Intel turning. Okay, let's see what Intel looks like. Hope you're having a good day today. The security stocks were hot yesterday. Got CrowdStrike pulling back a little bit. Okay, we'll look for an entry there. Datadog pulling back as well. That had a big move yesterday, 25 points. 25 points. Pulling back. We're looking for a bounce. Datadog. Zscaler looks really good too. Zscaler probably the best of the group right now. Zscaler. That's really nice. Zscaler trending. Just pulled back this morning. Bollinger Bands. Looks great.
Is the cat in the garage?
Yeah, she's in the garage.
She likes it there.
I don't know. Ask her. You seem to talk her language. Okay, S&P pulling back a little bit. SpaceX also pushed back a little bit. Airbnb hanging in there. Cerebras trying to push. New York Fangs backing off. Meta, Tesla. Snowflake's trying to bounce now. Okay, what's Oracle doing today? Oracle looked good yesterday. Only to disappoint today. Man, okay, so we'll look at a higher low. This will probably print a low here somewhere. The pullback is your better opportunity. You want to buy the high. Snowflake. Snowflake still trending. Broadcom trending. It is pulling back a little bit right now. Broadcom. We got that gap to get above. We got a gap here to get into. Broadcom having some issues. ASML, this has been active today, breaking above the 50-day. Yesterday, retreating back below. Now it's above the 50-day. ASML. ARM Holdings. Let's see. ARM Holdings. A little dip. Teradyne, Axon, ASML, KLAC, KLAC, ARM Holdings, KLAC. Okay, XLB. Let's see who is actually moving. XLB materials are on the move. Okay, let's look at Freeport McMoran. Nope. Newmont Mining. Yes. Gold Miners, GDX. Looks okay. GC, Gold Futures. Okay, Gold Futures. Okay, S&P 500. What are we doing here, S&P? Just consolidating at the 50 at the VWAP. Okay, here goes Snowflake. Snowflake on the move for day traders. Looks like we might take out the pre-market high. Opening range high and pre-market high are in the same place, it looks like. Okay, you can see right there. They're right on top of each other. Opening range high and pre-market high. Looks good. Okay, Palantir look like it wants to follow through. Palantir. Okay, Palantir, 60-minute is working.
To be wrong, but we need to change the stance of policy.
Let's look at X. Okay, Palantir looks like it wants to keep going. Okay, so we're looking a little better here. New York Fang is looking better. Okay, it's still a doji over here on the far right. The trend line, the horizontal line is kind of covering it up. But if we break above today's high, it would be indicative of these stocks catching a bid. All right, Snowflake is starting to go right here. Snowflake is going. Palantir too. Okay, Palantir and Snowflake. Okay, Snowflake. Snow. Zscaler looking good. Zscaler looks really good, right? Zscaler.
Key input into my restricting. Do look at
Oracle, Tesla, SpaceX, Hertz. Okay, what's Meta doing? Meta's still looking good. Watch Meta, still looking good. Okay, Meta looking good here, above the 50 day. Meta is above the 50 day. Look at Zscaler. Zscaler looks good. Meta. Snowflake going here. Snowflake. All right, here's Palantir breaking out. Okay, opening range. Okay. Okay. Looking good. Okay. Okay, Meta looking really good here. Meta. Opening range breakout on Meta.
It's simple, but it's always fought reckless spending.
Okay, Snowflake is running here. Snowflake. Okay, if we can just get, okay, now Microsoft turning the corner now. Microsoft turning as well. Microsoft turning. Shit, if you can't get something out of these. Microsoft going. There goes S&P. All right, Microsoft, watch Microsoft here.
But this also comes as retirees eye what this means to their cost of living adjustment. The Social Security Administration is set to release next year's adjustment.
Okay, S&P just pulled back in a little bit, trying to trick us. Just chopping around VWAP.
Exactly. This is the first report that goes into the data that Social Security puts together to determine what the cost of living adjustment will be for next year, for 2027. So they take the inflation data from July.
That hedge flow line needs to start trending one direction or another. Okay, Meta looks like it wants to keep going. SK Hynix just below the opening range high. Palantir, one of the better looking stocks today. Palantir looks like it's about to coiling up again.
Which the average $2,081 this year.
Okay, Rocket Lab. Let's see what that looks like. All right, S&P looks like it wants to go. RKLB, Rocket Lab. What a drag, it is getting old. Wow, 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 wow. What a drag, it is getting old.
In the paycheck for Social Security recipients. So that's
Microsoft, nice bounce. Looking for Apple to bounce. Hurts. It hurts. HTZ, $2 stock. Okay, at the highs, 265. All right, it looks like it's going to do something here. Bollinger Bands opening up. This looks like Circle. Circle. Bollinger Bands opening up on Circle. You see that? It's above. It's trying to get above the 50-day. If it follows, you know what? I want to buy some Circle on the dip here. I'll wait until the evening session. Probably going to bounce some more here. Circle. There goes Airbnb is on the move. Airbnb looks good. Opening range breakout on Airbnb.
face as we look into 2027, and they keep their pensions, taking their checks.
Airbnb.
During the market, who is just about to embark on that journey as well. We verify.
What a drag it is getting on.
Yeah,
Bum, 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 bum.
it's scary when you're on a fixed income. Yeah.
That's key one.
Most important thing to think about when you're considering starting something. Try to delay as long as you possibly can.
Airbnb looks good.
I get that. But you can start your social security as early as age 62. But for retirement age, for most people, if you were born 1960 or later, is age 67. If you can at least get to your full retirement age before you start taking your social security check, you'll give yourself a 50% off because they really hit you if you start taking at 62. If you go up to age 70, you'll have the biggest check possible moving forward. Again, not everyone can do that, but it's possible if you can push back as long as possible. Give yourself that benefit of getting a bigger check.
Terry, really quickly, do you think that this means that retirees do have to plan more though for Medicare for their medical costs? Is that what is the bottom line here? Do they plan ahead, think that it will inherently cost more next year?
Oh, yes, I think absolutely, Brooke, and I'm glad you brought that up. I think certainly, medical costs are not dropping back for seniors. And in fact, it's becoming increasingly more concerning on lots of levels. So you do need to plan for that because you can open enrollment for looking at Medicare, your various things that plan, your drug plan and so forth will come up in the fall. But it's very important, and it sounds really simplistic, but the most, anything you can do to stay healthy, to eat healthy, stay fit, take care of your health, these are going to have huge financial repercussions in retirement for you.
Terry, and always be the best advice. Thank you so much for your time. That's it for Market Catalyst. Thanks for watching. Stay tuned.
Okay, Airbnb is on the move here. Looks like it wants to go. Airbnb. All right, Airbnb is still going. Airbnb still going. Don't buy the high today. Look for next dip. Hertz doing really well. Just taking some notes here. What the markets are doing on a day where the S&P isn't moving much. We do have advanced decline. Advanced decline was pulling back yesterday. It is bouncing a little bit today. S&P on the top panel. S&P in the top panel. Mid caps, small caps, and NASDAQ. You see NASDAQ is doing the least bit of heavy lifting at the moment. Okay, SK Hynix looks like it wants to go. It's trying to get above the opening range high.
In less than 10 seconds.
All right, I think my mic might have died there for a moment.
But we don't talk that about once in a while.
Okay, Hertz looking good at the highs. Hertz. Meta looking for a break to the upside.
What are you doing today? Are you trying to down the next thing? Are you investor or WNW?
Okay, Airbnb.
What I love doing most and so very so rugged to see that. Well, when we find ourselves in we'll talk all about it.
LAG may rest in 10 seconds.
Look, I think over the weekend, why should Steve play by independent
Okay, Airbnb hanging out at the highs. S&P kind of just stalling here.
Some payments really feel them coming. Mortgage, everything, when they hit hard. That's my split. Rent, car, mortgage, doesn't matter. Now, half with my next paycheck. They get paid in full, on time, every time.
Wow, that's scary. Splitting the bills. Yikes. My late father always told me, if you can't afford a beer with your friends, you really got problems.
With Instacart, you can turn your ideas into custom apparel you can't wait to wear and share.
So you can introduce your brand before you even set time. Give your whole team a glow up in professional polos and outwear. And upload your logo and proof. You've got a photo with print so clear. Jumps right off the fabric. Just think of it, click it, and print it with Instagram. Because with all the colors, sizes, and styles you need, anything's possible. Prints are possible with 20% off at PaperPrint.com.
Okay, what's AMD doing? AMD. All right, not much follow through. Intel looks like it wants to get something going. Yesterday it did this a couple of times and failed. Intel, watch Intel here. Intel. Okay, I'm going to take a 5-minute break. I'll be right back.
LNG voltage that's that.
MSG1.
Well, hello and welcome back. I am Kenny Poltari, and this is Trade Topic at Finance. Today, I'm joined by Stephanie Gill, who's the CIO at Robinhood, and many of you know Ryan Payne, who is the president of Payne Capital Management, and also the host of Payne Points of Wealth. Right off the top. Anyway, thank you very much for joining me today. I really appreciate it. There is a lot going on, right? We're in the middle of this earnings season. This is a big week for not only earnings, but for the Fed, for markets, the economy. Really hit, broadside by a bunch of different things. So let's talk first about kind of where you think, and then where you think.
I think we're in a time period where expectations have caught up to some of the numbers. Like, if you look at the earnings growth expectations increased by 50%, across the board for the S&P 500. When estimates grow by that, quarter, and I know it's coming out of
Employment not over.
that we're, there, I think that's where you kind of get some like concerns, like our expectations too high. And I think that's what you're kind of seeing from day to day.
Right. Well, and I think we've seen that over the last couple of weeks. Certainly, expectation in the growth in the tech sector,
Yeah.
were obviously or
Yeah.
fly.
Yeah.
At least that's kind of the sense that we got from the market action. I think what you're seeing is that it's not like money's coming out of the market. It's okay, right? And that's the thing. We're pretty broad for the first time.
MSG1.
And I mean, those are last month. And I'm seeing it.
For this week.
So it's really been basic points. People start getting nervous about market action. This is liquidation. Liquidation would be consultants selling everything. And saying liquidation.
So, yeah.
The hope and watching the relationship. What could be in the future is real inflation is definitely a risk. We're seeing seems like then you start to realize the impact.
It might be because it is a big factor. It's one of the big. And the first one I shared, I believe is like, so they would be the first one to react. The first two. Yeah. Pretty pumping. So it's gonna, all that stuff. I think they're gonna disappoint that. So it's just like, when is Wall Street? So it had some. Listen, to be fair, I don't like the fact that we'll see about this. We'll see. We'll see. The next 3 or 4 days, it'll be very key to where.
There are models. Explosive take. Like I do want to talk to the make myself the expectations in this time extreme this second but I so wonder.
But you see, that's true because coming into this earnings season, I think the market said. And so, you know, all the time, UBS came out last week and talked just when you get prime they can kind of see what's going on. Big places like.
Excuse me, think it's a good idea. The best. If that goes further in the future. The current. We'll do that. Makes sense. It shows you that somebody that.
Yeah. Yeah, the reason it's like just enough to pay negative.
Okay, everything's pulling back. All right, let's see. It's almost 12 o'clock. Let's see what they're talking about on, I don't like Bloomberg, but let's see what they're talking about. I wish the financial media wasn't so frickin' political. Just stay on finance would be much better. Really a drag. Politics and everything. You can't get away from it. Such a drag. Okay, riot's starting to turn. Tony, you're looking for an opportunity? Okay. All right, the market's just kind of sitting here. Many stocks pushed higher. So long as you didn't chase them, you're going to get a better opportunity on these dips. S&P, no follow through at the moment. Okay, let's look at Riot for Tony. All right, starting to turn there, Tony. Might be a good opportunity. Rocket Labs. IB is still at 88, so still pretty high. Rocket Labs. Rocket Labs, RKLB. Way over here. Okay, selling put spreads makes sense now. Rocket Labs. Okay, Rocket Labs in the far left corner. Okay, its risk reversal is at 4.8. This was at 70, 80% yesterday. IB rank is 59%. Okay. Consider selling put spreads now. Okay. Let's see what the S&P. S&P pulled back.
CEO Peter Beck just told Bloomberg the company still intends to launch its neutron rocket this year as it pushes second space actions. After Beck appeared to soften the timeline for Neutron's first launch.
Advanced decline percent. Generally looks pretty good except for NASDAQ. Tech stocks taking a little bit of a break. S&P 500. Weekly inside bar on the weekly. Made new all-time highs last week, everybody knows. Okay, we made a new all-time high today on the equal weight. This morning, made a new all-time high. Number of stocks trading above the 20-day are not overbought, not in the red zone. We're not in the red zone, so these could turn up. Number of stocks above the 50-day kind of taking a break. We're trending. Let's see what the New York Stock Exchange looks like. New York Stock Exchange, new highs, new lows. NYSE making new highs. New highs minus new lows. We're not making a whole lot of progress. We need to see taller histogram bars. Advanced decline is rising, higher highs, higher lows. You can see over on the far right. Higher lows, lower highs. We need to see a higher high now. Green elder sticks, New York Stock Exchange. Okay, ARCA Institutional Index. We want to see what the institutions are doing. Okay, so two blue elder sticks. That's telling you that the markets are taking a break. yesterday and today, the markets didn't go anywhere. We had dojis basically.
There's also the ambition to ramp up, but essentially through the end of the year, I guess that is
Yeah, and we've been focused on rent construction for a long time. Really, since we started the company, we knew we had to be very forward in the supply chain. But this year, we've seen a big growth there. So today, we're at 50,000 drones per year output. By the end of the year, we'll be at 100,000 drones per year. We're looking for, we think that getting the company to 1 million drones per year capacity is extremely important for having a strategic impact for America. So that's really the big focus on factory that we moved into a few months ago. We call Millennium.
Okay, so that looks good. Our institutional index, another doji, blue candle. So if you're expecting big moves, right now it's telling you not so much. What else? Let's see. What can I look at here? Let's look at the Dow Jones Composite. Dow Jones Composite. This is a reflection of Dow theory. You make the product, you sell the product, you ship it to market, and it needs energy to get there. That's the three components: manufacturing, transportation, and energy. 65 stocks not following through. So right now the markets are just kind of sitting still, looking for a catalyst to push it to a new high above the 920 50-day. Just no energy there. Let's see what else. We talked about junk bonds. Let's look at NIMO and NAMO. Let's see what NASI and NICE. Let's see what they're doing. Okay, this is a bullish turn. So this is trending in the right direction. This is the NASI, the summation index for the the NASDAQ composite. NIMO, that's been pretty much flat. So this isn't giving you much direction as well. So doji action is pretty much what we're looking at today. As you can see, the hedge flow line just keeps going back and forth, up and down from the open.
You're doubling your performance every year or so to kind of outpace all the defensive capabilities. And so like
Rocket Labs, looking at level 2, not much going on there in terms of volume. Riot turning the corner. Riot is turning the corner.
is on an exponential
Palantir still fading.
pace.
It made a new high and made a high today and faded inside of yesterday's price action. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Big 60-minute bearish candle on the futures. We're currently down, what, 11 handles? 8 handles, 11 handles. Okay, Intel's trying to do something here. Intel trying to turn the corner. Okay, Intel's starting to grind higher.
It's sensors, it's integration of the electronics. Like is scalable.
What's SpaceX doing? SpaceX. All right, flat. Airbnb flat at the high of the day. Hertz looks like it wants to go some more. Hertz. I have the $2 strike for September. That's up quite a bit, actually. All right. $30 a contract today.
When we started the company 3 years ago, there was no way you could go and buy it.
Circle, what's Circle doing? We had some Circle sold into strength. All right, looking for a B and C pivot on Circle.
Ecosystem, computers, all these other things that are critical going inside of the drone, and being able to actually manufacture them at scale. Now that we've established a strong baseline there, we are pushing more
on the software aspect with the autonomous capability that we're adding, as well as using that same component ecosystem from Archer into Bandit, our new platform. So we really think there's this flywheel where you build up this amazing base of components and it allows you to go build other types of platforms very quickly.
You said it yourself. 3 years ago, you founded this company. To date, you have what you describe as major contracts with the Army, Marine Corps, contracts with every component of SOCOM, and other allied countries. Give us the backstory of how you were able to do that.
Neros. Neros, are they a public company? Neros?
The software
Neros, Neros?
in Ukraine, working alongside Ukraine.
Okay, so it must be a private company for it. Neros they're talking to? CEO?
From a procurement perspective, they didn't really think that small drones had a massive impact for the US warfighter. We had this bet that they would be and that the Pentagon would realize that. And I think we've had a really interesting front row seat to watching that realization happen over the last 18 months and being well positioned to start delivering on real contracts as America has said, hey, we actually need drones, we need drone dominance. And so that has been, because we focus very heavily on building a useful product in Ukraine off the bat and then scaling the production, I think we've shown that.
Okay, Hertz, okay, so this continues to fade circle. HTZ, Hertz. Okay, we're at the high of the day. Hertz is holding on very well here. Any news on Hertz? Hertz, yesterday.
So starting as a young kid, he was just obsessed with drones. That's the technology story, your background story. And then kind of when the war in Ukraine started, he's
Okay, Hertz looks good.
For Ukraine, for the entire West. And I said, young guy, early 20s, maybe even 19 at the time, basically flew to Ukraine and just started trying to help the Ukrainians learn how to fly drones and push the limits of their technology. That led to, really getting
S&P starting to catch a little short covering here. S&P, a little short covering at the low. Okay. Looks like short covering. Look at MACD. MACD and RSI are turning.
The national interest of this country or the West. Those contracts we discussed are with the public sector, essentially.
Opening range high is much higher. Intel trying to do something. All right, the markets are stalling right now. Markets have stalled.
Way number one is I've been very lucky to see SpaceX up close and then follow Tesla. And by seeing how SpaceX operates, which to me is the most vertically integrated company in the world, I feel pretty confident in that statement. My vision is that there should be 10 companies like SpaceX in America, and that is how we reindustrialize. And what that means is that
okay, no follow through on S&P right now. Showing more weakness at the moment.
Over time, vertically integrate your supply chain more and more. And then once you have this vertically integrated supply chain, like SpaceX now.
Core 1M.
PCBs.
Core 1M is 878. We've got 275 stocks advancing. We had about 320 at the open. So we lost about 50 stocks, basically, 40 stocks, advancing stocks. We're even on the Qs, 52 stocks advancing. IWM is about 1,050, 1,060. That's about the same. Neutral. Rocket Labs looking for another pop higher. Rocket Labs. Aluminum, huh? Aluminum. Aluminum, big gap up on aluminum. What is it? Aluminum. Brazil cut its aluminum production. Let's go take a look at the metal stocks. Materials. Let's look at materials. Aluminum gapping up. Supposedly there's a shortage of aluminum. Air Products, Allegheny Technologies talked about that one to start in a weekend video. Ball Corp. What is the CF Industries? Trending. DuPont.
This is one of the areas where Chinese drones are incredibly good. They iterate radios extremely quickly, and DJI, which is the world.
Century Aluminum, nice change in direction. Century Aluminum.
And so we think that the
Okay.
investment to the defense
Late for the trend here. Late for the trend. What is it you were looking at, David? Go earlier? Go. 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 Squeezing. Grocery Outlet Holdings. Okay, what were you looking at there?
This was capitalized by specific event. Could you just view and
Yeah, I mean, we have been watching the development of interceptor drones in Ukraine for the last year and a half, and it's something that we knew was going to be on our
October 750 calls. Let's see. Go.
distracted and build too many things at once and go. And so we really had to pick the right point to go and build Bandit or Interceptor. But when events started happening in the Middle East, we saw that American assets were getting targeted by Iranian drones and
Go.
did not have a reasonable defense.
this interceptor interceptor.
Nine change.
Shotgun style drones and takes them out of the sky. And this is the most economical way to defend against these types of drones. And so when we saw U.S. service members' lives in danger in the Middle East because of those threats, we knew we needed to act.
Your 60-second assessment, how they move quickly, their execution. I think this is something that software investors get up for companies, for software companies. When you have one successful product, it doesn't give you much of an advantage for building a new product. In hardware, when you have one successful product, the probability of having another successful product is very, very high. So you need to reuse a lot of the same components, makes it, you already have the supply chain, you already have electrical engineers. So the interceptor drones is actually about 80% in the actual componentry and know-how. And so it's just, I think this will be the second, but not the last. Again, it's big, but I'll show you feedback on a very future basis. I appreciate you taking the time to this year, supply chain, some other news headlines and talking tech for some. The White House has rolled back a TikTok government devices. A memo from yesterday states that TikTok is no longer covered application for purposes of the No TikTok government Devices Act.
Airbnb. Okay, that looks okay. Hertz at the high of the day. One's here. Palantir looking for the dip to get bought.
The move underscores Anthropic's efforts to gather enough computing power to meet its customers' demand, and OpenAI has been buying back $7 billion worth of shares in potential IPO, according to sources. The ChatGPT maker said to be buying back shares to current instead of tapping external investors for that tender offer. We're still tracking the line. Yes, it continues. Again, a story about moving quickly to get compute capacity online. The stock's trading water 82% before the print. Largely speaking, it's the in the Middle East driving public equity right now. There's big movement in bonds that might be going on here. There's the kind of feel good around a day two story on Nvidia's $500 billion deal with Wall Street to collateralize compute. The Nasdaq 100 is flat, the stocks is up 9%, and again, Intel, $20 billion share offering, the market $15 billion. We're reporting that there's $100 billion of market. It's all playing into what's happening on your screen right now. My goodness, what a fast start to the week. It's only traded Tuesday, so much across public markets. I thought this is
Mhm.
only thing that's happening on Apple, Spotify. For San Francisco, this is what it's happening.
Okay, we're coming into 12 o'clock.
Quality brands, best prices. Upgrade deposit today.
We're a veteran-owned company and we've been building custom submarines for with 3 custom designs to on-site project reviews and permit assistance, we make the process stress-free and easy-free. Hey, mister. He's brought real jobs to this.
Okay, market's not looking very bullish at the moment.
But Washington continues to spend.
Okay, SPY just sitting up here. Some buyers of March 710 puts, 4,500 for 8 million. Also some 1,000 January 2028, 790 in the money puts for 6 million. A buyer
Keep your favorite brand or style, pick your size, and well curate your best.
looking for after 2027 into the new year, looking for a dip.
Many units carry high quality prices.
Kind of an odd trade.
Always forward to 80%. You shop your ultimate summer looks to find your stock. Buy from Bloomberg's Love. Is that me?
People transaction and technology shaping decentralized finance.
Here's what today.
All right, looks like we're starting to turn up now.
Sleep is nice.
In just a moment, Galaxy could seem to take back the public space of effort when
Okay, this is non-zero day you're looking at, non-zero day. Trying to get back above this 77.50 zone. Starting to bounce 77.67, shorts covering.
$60,000 range, really over the past couple of weeks. Last 2 days down by 2.5%. Look, the industry is dealing with fallout of that cold cut action. We're not seeing any catalysts to move Bitcoin one way or the other. Strategy was on my radar for the last couple of days. This company, formerly known as MicroStrategy, sold $108 million of Bitcoin and 6.6 million common shares for $653 million. It's bolstering its cash reserve. It's a day when strategy we thought would never sell. It is doing. Also, media and technology also shares over the last few days down about 10%. They reported a second quarter loss of $238 million, driven by plummeting prices for these cryptocurrencies that it owns.
Tim, and I'm watching another big stock mover today as well. An AI compute ledger, Rabbit platforms, the company just funded another topic to provide for AI. Look at the stock shares. Thinking is that intention. That deal, Tim, could invest in to $16 billion.
Crypto community just real. It was a breach involving cold hard wallets made by Cointype, betraying an estimated $130 million Bitcoin for about 7,200 wallet addresses. Alex Campbell's Galaxy Digital's head of research, he's spoken to dozens of victims. He told Bloomberg that he was struggling to sleep and was put physically ill last week in efforts to mitigate the fallout. Alex joins us now. It's good to see you. I know you've spoken in the past couple of weeks to 100 or more of these victims. What have they told you about what they've lost?
Yeah, thanks for having me back. Very tough conversations with these folks. These people that did everything right. They didn't accidentally lose their keys. They weren't, trading deep down the risk curve in DeFi going chasing yield. They were saving the money in Bitcoin, sending it to the portfolio to help save. And it turned out to be a terrible story. People losing their life savings. People
Looking for a bounce.
Rescue the funds because they were camping. In this case, on either just to the sad stories you could think of.
Conversations on this. Do you think we're anywhere close to moving the true scale of loss, or do you think we're still in the early stages?
I think we're close to knowing the true scale of losses, the acceleration in identifying lost victim funds, the growth is slow, right? So I do estimate that it will be over 130 million in the second estimate, or I have it now 12 million and directly confirmed. Either because the victims themselves have confirmed those exactly, because confirmed victims' funds were co-spent into the same attacker address. So it is still rising. Victims are still coming forth. The nature of this attack is very different than other crypto attacks. Without victim reports, you cannot find all of the attackers, right? The funds are not flowing from one centralized point, and then we have to trace them downstream. We also have to trace upstream because the funds are sitting across many distributed wallets that have never interacted with each other.
So you've been in this industry for pretty much time. Seen a lot, seen now, for example, you've seen the fall from SPF and GX. You've seen the kind of stock between ETFs. You've seen what the Trump administration has done with Bitcoin and digital currencies. Where does this particular instance sort of fit within the context of the life of Bitcoin?
Well, it's particularly devastating, like I said, because of the cultural demographic of those who are affected here. You take Mt. Gox or FTX as examples, Tim, like those at least, still tragic, but at least those were people who knowingly sent their funds to the third party, right? Again, these people who lose money in their cold hard self-custody wallets largely are not speculating. They are every day buying Bitcoin over time. The average dormancy of coins that was stolen is about 4 years, right? So they didn't just buy it, reducing the risky. The median loss here among reported victims is 1 Bitcoin. And many of those people are telling us it's their life savings. So I don't know exactly where it fits. It's a tough question, never-ending saga of Bitcoin and blockchains, but it is a particularly unique blow to the core philosophy because it involves secure self-custody and self-storage. And then we were talking to the guy from Ledger later. This vulnerability is not affected. Right? It means it's specific and isolated here, but I think just the nature of it has the Bitcoin community and will damage the near term.
Yeah, I'm sure it's going to make a cost. So you got me thinking about this sort of you said, at least in the short and medium term, is there a long-term damage?
I think it's going to survive. Bitcoin has such a compelling story for those who believe in it. I actually think the long-term impact will largely be positive. You have developers coming together from across the ecosystem, utilizing the most modern AI technologies to red team Bitcoin open source software at scale. I think some lessons have been learned here about, Bitcoiners like to say often don't trust, verify.
Okay, we're starting to rise a little bit. We still need to see hedge flows turn up. Okay, Hertz is starting to move. Trying to take out the high of the day. Hertz, cheap stock, just on my radar. Hertz is taking out the high of the day. Hertz taking out the high of the day. Opening range breakout. Lots of volume this morning.
To follow some of this Bitcoin on-chain, how much of this can you realistically recovered or frozen once attackers start moving it off-chain and maybe to other services?
Yeah, that is a tough question. It is hard to follow because of the disparate nature of self-custody storage. I would say that by our count, about 90% of the stolen funds are currently sitting inert, unmoved from attacker addresses on chain. Some have started to trickle, especially from later waves of attacks, into things like bridges and exchanges, where it gets a lot harder to track. In terms of the percentage chance of recovery, we don't quite know. I would say it is probably pretty low, but there have been many instances where Bitcoin was stolen and sat for a long time unmoved, even 5 years. If you think about the BitFinex hack, it sat for like 5+ years before eventually being recovered almost in full. That's the effort that we're undertaking, is to widely propagate the attacker on-chain addresses to centralized intermediaries like brokerages and crypto exchanges, federal law enforcement, so that if the funds ever do flow to a centralized point, they can be frozen and hopefully recovered for the victims.
And we do appreciate you pointing out the fact, Alex, that this isn't, it's not widespread, it's not everyone being affected. But I'm curious, what do you think, at what point do we stop calling this hardware wallet exploit and start calling it maybe a systemic failure in the way people view self-custody in the Bitcoin world?
I don't think you're going to get there. I mean, it's a reasonable question, though. You're not the only one asking it, Isabel. This, again, not just because this was a hardware vulnerability generally, but this company, CoinKite, was widely thought to be one of the most secure.
What's Intel? Intel's not moving much. The stocks aren't moving much. Palantir's turning back up. If you like Palantir, Palantir.
People took when they didn't think they would take it. So it's
Palantir, the dip is ready, starting to turn. Palantir.
This is a Bitcoin vulnerability at its core. I think the price of Bitcoin over the event, I mean, last week throughout the event, Bitcoin was rising. You had strategy selling and this cold card attack in Bitcoin rose
173
unmoved range.
plus or minus. 173 plus or minus on Palantir.
That is most notable, 112 million. It's not that big of a blast radius as far as the market's concerned. And when we talk to institutional investors, people are concerned and upset to hear about it, but almost none of them are affected.
It's always great to check in with you. Appreciate your time. And we're going to stay on this story and hope you come back and join us with any updates. Alex Thornover. Well, coming up, we're going to discuss how this latest hack is even possible. Ian Rogers from the hardware crypto storage firm Ledger is joining us in just a minute. And access all the latest data and news on crypto. All you got to do, check out CRYPO on the Bloomberg terminal. This is Bloomberg.
All right, let's see what the 60-minute looks like. Palantir, PLTR. Okay.
We have a diversified global portfolio that's designed across different cycles, taking into account different forms of risk. The world is certainly changing, and it's certainly changes when the market changes. You have set up a strategy to really outperform in that.
The end of jobs, or the end of human struggle. We see the endless funds fueling the air. There's smaller points. We follow the money.
Tired of sugar crashes and sketchy energy drinks? Meet the guilt-free all-day energy everyone's getting from loadedtea.com.
All right. Palantir. Looks like a bear flag. Could be a bear flag.
Go to loadedtea.com to bundle and save today. Loadedtea.com. Loadedtea.com.
It's the dog days of summer, which means you can make our slow time the best time to remodel your bathroom and you save 20%. Whether you want a new shower or a new bathtub, you save 20%. If you're looking at you save 20%.
All right. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Tuesday, August the 11th, coming into lunch. Let's look at the watch list, by the way. while I'm thinking about it. Let's look at the watch list, see how that's doing. Got a nice mix of stocks that we were looking for forward to bounces. All right, here's Apple, Allegheny Technologies, metal alloys, specialty metal alloys, Bank of America, banks trending, Cerebras earnings this week, tonight or tomorrow. Cerebras check. Credo above the 50-day, looking for that to bounce above 260, 265 or so.
If the cryptography is correct, full switch is the best solution.
CrowdStrike, inside day, Dell, Dexcom breaking out, IBM following through, IoT Samsara trying to take out the highs, JD.com earnings, it gapped down, JP Morgan. By the way, JD.com, if it does hold this 21-day, it might be a good entry. JP Morgan trending, Medtronic breaking above the 200-day.
Security. What happened in this case is that they had a vulnerability in the firmware that basically stored the Bitcoin over too small an address space, an address space that was small enough that an attacker could effectively explore that space and find those addresses. We actually found a similar
MDT,
in 2022.
Meta, okay, it's off the highs of the day, but it's trying to stay above the 50-day. That could be something significant. Morgan Stanley, no follow through. Microsoft at the highs, Nvidia at the highs. Rocket Lab holding on to the 9 EMA and 200-day. SPY value continuation. AT&T moving higher. AT&T trying to get back above the 200-day. AT&T. Okay, that's looked good for the whole week. 4 white soldiers off of the 50-day reversal. Verizon, AT&T, T-Mobile, telecommunications, all look good.
Which is sufficiently to avoid this. That's simply not the case in this.
Okay, S&P is starting to bounce a bit more. Okay, watching this dip turn, hopefully turn back up. It's got this support here. Negative gamma overhead all the way up to 78.10. Can we get a rally? We're due for some news. On again, off again. Iran, we're looking for some news. We're due. Okay, T-Mobile, we left off on T-Mobile and Verizon. Exometer. Exometer, no follow through. Zeta breaking out.
Security in the page and in your view, how even can be more quickly as a result of AI. Also, how do you create protection for these assets in the age of AI? What's the approach to do it? Yeah, I would actually zoom out a bit and say this is going to the ability for AI to find vulnerabilities in all kinds of things. So it makes sense that
okay, it's 12:17. I gotta switch over to CNBC, I guess. Let's see, CNBC. Having a good day today. It's flat. 2 days in a row. We got blue elder sticks. Blue elder sticks on XII telling you our institutions aren't doing anything. They're sitting here watching. Maybe we'll get some buyers after 2 p.m. Usually that's when we see indications whether or not they're interested. After 2 o'clock, evening session.
The capital raising, debt and equity, all are sort of overhangs. How do you view all that?
They're in the penalty box here a little bit near term because of the reorg, because of where they're spending money, but we still believe that with respect to how they're going to monetize AI is a proven, they've proven that they can monetize what they run inside the company, just like Microsoft. And so I think this pullback is a great opportunity for longer term investors to continue to buy the stock. We think it's one of the 5 stocks in the US should absolutely positively own.
It's a portfolio of businesses. It's not just one business. They lead in cloud. They lead. They diversified business. So the other story that we're following today is a report that Anthropic is trying to shore up confidence from the investor base ahead of their coming IPO, whenever that may be, perhaps as early as this fall. Kay Rooney is following that story, following the money as well for us, and joins us from our bureau at One Market, San Francisco. Hi.
Scott, so that does align in some parts from what I'm hearing from sources out here. Anthropic's IPO, according to sources, could be as soon as October, and I'm hearing that the company has been meeting with bankers as part of that entire process. But the Wall Street Journal with some new details about what's going down in those meetings. Anthropic has reportedly been offering assurances about its growth rate during all of that, has been also fielding questions, according to this report, about the company's growth rate and revenue.
To pass to get this price discovery. It did get, I think yesterday it was back above the 135 level, the offering. It's back below it now. They did get reiterated overweight at Morgan Stanley. You own the name. We do own the name. Again, we own the name because we're locked up. We own it from the private side. So we haven't bought any since the IPO. I think, we're very happy with the business. I think what moves SpaceX up is Starlink growth, higher connectivity margins, and a disciplined CapEx commentary. I think if you don't get a disciplined CapEx commentary, I mean, everybody knows this company can build rockets. They want to make sure they're spending in a way that they can return some profitability back on that spend, get a good ROI. All right, so let's get some moves before we take a break. It's from Brian Bellis. He's got a couple. Hey, yeah. What? Go ahead. Yeah. Are you okay? I'm ready. What was that? Hey, he's in the starting blocks. All right. I'm torqued up. Let's go. Why don't you just take it away? I'm just gonna be quiet now. Go ahead. Go ahead. What do you want to talk about first? Just go ahead. You choose. Qualcomm. You decided you were going to do your thing. Just go.
We sold Qualcomm because from a dividend perspective, it's a bigger portfolio. And we like financials a little bit more. So we did a 1-for-1 switch from audit.
All right, the New York things are all off right now.
Do you like financials better than chips?
Yes, we do. And we like the dividend growth in Truist in particular and the yield relative to Qualcomm. And I think too, from a technology perspective,
Citi trying to stay above the 50-day. Citi, Bollinger Band starting to open up. This could get going here. RSI rising. Stochastic MACD turned up. Volume looks good. Citi, Bank of America on the watch list is trending.
32% financials in our value portfolio, Joe. So I want to get a little bit bigger in certain names. So we sold our Fifth Third, took a victory lap, and added to a couple other names.
Good trade, but I think you stay with
Bank of America,
That's what we're doing. You're going to see
JP Morgan, JP Morgan.
stock looks great. Financials, by the way, are going for the 11th consecutive week of gains. It's the longest, Josh, since '89 at least. We'll see whether I mean it's early in the week, obviously.
Goldman
We got
Sachs,
tomorrow with the CPI, but
Morgan Stanley.
I can't think of an area in financials I don't like other than payments, which got some weird PayPal related. Will there be consolidation or will there not? Away from that, I like the credit cards. I like the regional banks, which we've talked about, spread financials. I like the banking financials, anything that's even tangential to Wall Street. I like the asset managers. I like the money center banks. I like the brokers.
Raymond James Financials.
Robinhood. We talked about interactive brokers on my list of best stocks in the market. We talked about Citizens, which I'm long. CFG. It's a cornucopia, Judge, of stocks that either the profitability is increasing or the charts are running up, or in many cases both. Insurance, we talked about Berkshire. JP Morgan made record highs recently. Morgan Stanley looks amazing. I mean, this is like one of the hallmarks of the 2026 bull market. It's how well almost every financial that matters has been acting and how great the guidance looks. I mean, this is one of the most important legs to the stool.
yeah, throw out some private equity names as well, guys, if you could, please, because they look great today. Look at all these names, the Airspace and Blackstones. Yeah. And maybe some of it has to do with that news that came out yesterday, but software's trading a lot better. That obviously helps this group, but there's a cycle through some of these names. One of the strongest areas of the market today, Apollo's up 6%, but there's your Blackstones and your KKRs as well. We'll take a break. Coming up, running for cover, one of Brian Belsky's retail plays is getting smoked today. We'll find out what he's doing a little bit later. We have Josh Brown's best stocks in the market as well.
All right, looks good. All right, looking good. S&P still dipping more. Feels like it's just going to slip here and just keep dropping.
I'll maintain the rest of the-
Down more than 19%. That's the worst day ever. New 52-week low. Revenues missed. Not a great guide. You put that with Under Armour getting downgraded. Nike's been a mess. Dick's Sporting Goods hasn't traded well lately. What's going on with this?
Well, their net sales were off big because the wholesale segment was very light. On the where they make their money and actually where their product is dramatically different than
On-
the other companies.
On holdings, dropping, okay.
48%. Direct to consumer up 26%. That's what they need to really focus. I think the problem is on the wholesaling side, they've got an expensive shoe. Their average shoe is $150 to $180. And so I think that kind of puts them into a very direct segment. But we own it because of the great product that they have in terms of the apparel side of things.
You own On Holdings for the apparel.
Yeah, that's where you want to. That's where I think where they're really going to make the money in the margins, and I think they have a better product than those other companies. We've owned the stock for 6 years. We bought it right before COVID.
You bought it for the apparel.
I bought it. Well, no, I bought it originally for the shoes, but we're holding it still for the
Do
apparel.
I sound skeptical?
Yeah, have you had the apparel? Do you have any of the apparel? It's fantastic running stuff. They have really great stuff.
I'm sure they do, but I mean, aren't the shoes, the sneakers, the bread and butter, the
Oh,
business?
on. I'm saying, I'm like, on semiconductor, how would they sell shoes?
They're charging $150
Dumbass.
sneakers and
On,
they're getting
okay.
They're not getting the margin because they're not getting the sales there. Where the margin is in their apparel.
What do you think? You're snickering over there. I'm laughing at you. Your face is just making me laugh today. So, is there a problem with this? Is there a problem with this area of retail? Like I said, Under Armour, Nike. I said Dick's Sporting Goods. Now this. Joe, hello. Anybody?
No, I'm here.
Bueller? Anyone?
Consumer discretionary is,
Control room. Anybody?
consumer discretionary is incredibly difficult to kind of see long-term sustainable momentum trends. And I think apparel is.
Palantir trying to turn here, Palantir.
Because of the fickle nature in the buying intention. Also, you have seen strength in off price. And strength in off price is generally equating to a negative growth environment for apparel. Absolutely. Because now I'm going off price and I am getting your product.
You think there's a gigantic trade down? I actually think the upper part of the judge, there's part of the economy.
Off price has been remarkably strong. Okay. And if you're telling me that the trends in traffic and off price are strong, that means that apparel is being discounted for sure.
That's why you always want to be with the better product. You want to be with the better product, and they have the best product in that category. Period. It's a way better product than Under Armour. Way better product than operational issues that are going to continue. It's too big. Under Armour's a failed company for the last.
Is there apparel competing with those companies, or is it competing with Lulu, Viore, those companies?
Well, Viore is not as athletic intensive as On, obviously. Viore's doing a little bit more casual wear and things like that. Viore's more along the lines.
Let's see, what's Rocket Lab doing? Rocket Lab.
It's going to a complete
S&P still drifting lower here. Rocket Lab.
It's more of a Nike and Under Armour comparison in terms of the athletic side of things. And yes, people
Holding on to the 200-day, doing chin-ups.
Company, and I think longer term, this is going to be a company that
New York Bangs not doing much. We're looking for an evening session to do something here.
You just don't have to be here.
Aklo.
Like if you're a manager and you have some sort of mandate where you
Aklo bouncing off the 20 EMA, 60 minute, trying to make higher highs, higher lows. Stopped right at the upper Bollinger Band. This week's price action, looking for a push through the 50-day.
Let's focus on what's working. And unless you know something the market doesn't, all of these companies have challenges. And there are lots of companies that are firing on all cylinders away from this group. Let's come back to this group someday, not this day.
Okay. Seema Modi has the CNBC News Update. Hi there.
Hey, Scott, I'm here to hear the stories we're watching. 100 firefighters from Mexico are joining crews battling a deadly wildfire in British Columbia. The 60-square-mile blaze has killed an 80-year-old woman, destroyed homes, and forced 20,000 people to evacuate. Canadian police have opened a criminal investigation into the fire's cause. The Ebola outbreak in eastern Congo has now killed more than 2,000 people. Officials say it is the fastest growing outbreak on record, reaching that toll nearly 3 times faster than the deadly 2014 to 2016 epidemic. Health teams warn the virus is still spreading faster than they can contain it. And the White House is lifting its ban on TikTok across federal government devices, saying the app no longer poses a national security threat. The reversal follows TikTok's January deal transferring control of its U.S. user data and operations to an American-led joint venture. The ban had been in place since 2022. Scott?
Seema, thanks. Seema Modi coming up. Josh Brown's best stocks in the market. He says a textbook breakout is underway in a travel-related name. He reveals it next.
Possible while expanding and trying to make its product more attractive to the future. So overall, it's a great company to be invested in. Obviously, if you're sitting right now, you're wondering though, should we continue to hold, or is this getting a little too pricey here? We think it's going to have a good quarter. I'm just not sure if it can hold up to those expectations.
Landon, you're right. Your data is pretty incredible how strong it is. Brinker is the parent company of Chili's and Macchiatos, which is very popular, but this is really a Chili's story. Their turnaround, they went in and completely changed Chili's, right? They put out a new menu, they changed, they really upgraded the food quality, big marketing campaigns, and that has really shown up in the numbers. Here comes the but though, Landon. You know it's there. You look at what the stock has done, and it may be like, okay, everything is pretty much priced in, all the good news. And if it starts to moderate, well, the stock could moderate as well. And so I think you're right. I think this is a company doing extremely good things. I just don't know if it's as good as the stock is showing us.
Right, I agree. And so, a lot of times we like to see demand going one way, price going the other. And they kind of are. Demand is going up and price is going way up. So there's a little bit of divergence there. But it's almost one of my least favorite trade type of setups to trade because we know that good numbers are coming. I think everybody knows that good numbers are coming. And then it's just kind of a reality check. Is this stock worth $230? That's what everyone's asking themselves. You've got to take into the fact that repurchases are there. That's really critical. So a lot of that is not just investors buying, it's the company buying. So they're taking some trade off.
All right, NVIDIA starting to turn. SK Hynix, just been kind of stewing all morning.
Could I get in something better? And so I think that's a bit of the concern. And what's interesting about this is, if you look at some of the estimates coming in, I think that we're looking at revenue up about 4.5%, but profit up about 23%. You got to scratch your head, like, how do those two things line up? How can profit be that much higher than revenue? And the answer is margins. Margins are going up, and the great or worst, either the wonderful thing or terrible thing about owning a restaurant is it's all about getting over that fixed cost barrier, right? Once you have a certain number of certain fixed costs, you've got to get enough customers in there to cover that. But then after that point, you're making a ton of profit on every single person, and that's why these numbers of plus 24% demand are so important, because they're now way over that break-even point. And now everybody that's coming in is a much higher per person profit, and so you can kind of see the divergence that I'm talking about here. This is not the common, but our numbers are going up. The stock is going up much faster, so there's a little bit of a head scratcher here to play it. We are leaning slightly bullish despite the high stock price. We do think good numbers are coming, but it would not surprise me if they posted really strong numbers, margins up, revenue up, profit up, same-store sales hit 21 instead of 20 in a row, quarters in a row, and then they kind of were a little bit muted muted or even sold off a little bit. Wouldn't surprise me. Like I said, we are just barely leaning bullish. So cautious on this one, optimistic long term, but the price has got us, sort of pausing a little bit.
Yeah, and because of the run that we've seen, I mean, we're talking about 65% move pretty much in 3 months. I mean, that's pretty huge. And the stock's sitting at new 52-week highs. I thought it was interesting, Len, that I saw as you were showing us, Texas Roadhouse and Darden are also seeing a great demand. And Eat is right up there with them. The other names also saw demand, though, and we're seeing restaurant sales up year over year. And it makes me think about affordability and prices. But all of these names, according to the data that you showed us, have up arrows. And that's somewhat reassuring overall. I don't know whether or not they can continue this kind of trajectory with the big gains, but it counts on the consumer getting to all of these places as well that they face.
Yeah, I agree. And you'll notice something about, all those companies that we laid out in that comparison is they're all on the cheaper side of restaurants. These are all, casual dining. This isn't sit down and order a $60 steak kind of restaurant. And I think that that's a big part of what we're seeing in the economy is in the K-shape, yes, the upper performers or the upper income are still going to go eat expensive restaurants, but everyone else is sort of looking to trade down. And the other element that we've seen play into this is fast food prices have gone up so much that eventually you start, you go to McDonald's with a family of 4, and if you're spending $50, you're like, wait a minute, we could have gone to Chili's for $50. And so there's almost like this weird trade down / trade up thing happening that's kind of the sweet spot for all of these restaurants that we highlighted. So while the overall dining, I think in the U.S. is anticipated to go up about 4%, you can see the demand numbers for these fast casuals not that shallow.
All right, the markets are not moving. All right, so good time to take a lunch break.
So, it's an interesting dynamic that's playing out now. It'll rebalance and remove over the years, over the months to come and everything. But right now we are seeing that pretty big shift towards these types of restaurants. Again, the question is it priced in? So they've got so much going for them. The renovations, new units, the margins expanding, the same store sales continue to grow, and EPS is growing. They're buying back shares, they're reducing debt. And the downside is the stock's up a lot. And it really is that simple, unfortunately, and that makes it kind of balance things out.
Yeah, more than 1,600 restaurants in 29 countries. This is no small footprint that he has. Landon Swan, thank you so much for sharing all of this data and sentiment with us. To talk about Brinker, and we're looking at this ahead of the earnings. Tom.
Yeah, you look at the data that, like Folio has, it's kind of tracked what the stock's done, right? Up 60% so far year to date, hitting all-time highs. It's overbought on a technical basis. I mean, the stock has had an RSI at 74. This is a restaurant stock, Chili's, Maggiano's. You mentioned the number of outlets they have, 20 consecutive quarters of growth for Chili's restaurants here. But that being said, stock is at elevated levels and overbought on that technical level. And you look at their, some of their data compared to where the stock price is. We always talk about divergences when the stock sells off and maybe their data is a little bit more positive. Well, this is the opposite. The stocks outperformed a lot of their data. So you have to take that into consideration. But the option market's pricing in a plus or minus $18.60 move in either direction, Kevin. I mentioned the overbought conditions in this name. They don't have weekly options. And I think one of the keys that when you trade a name like this, you got to remember that there's not a big share float out there, only about 42 million shares in this float. So it could be volatile here.
Yeah, you're right. And it is a wafer thin share flow that Brinker has, but it's also way overbought on a relative strength indicator. And so what I looked at here, you're right, Tom, the 1-day expected move is $18, but there's no weeklies. So 10 days to the August 21st expiration is $24. And out to the September 18th expiration is $34. And so I think you got to take all those into account. when you look at some type of trade, Tom. So I looked at something, you're right. When I see that the stock going that much further than the data and getting overbought on the upside, I looked at something in the put calendar family. So I went with the 1 month wide put calendar. I bought the September 18th 200 put and sold the August 21st, 10 days out, the 200 put. So just the $200 put calendar, trading about $2.75, trading a little higher than that now, trading north of $3, Tom. But this gives you protection of about five deltas on the downside. But if you're right, a $3 investment can get you probably a triple on your money, Tom. So this is one that, yeah, sure, you have to be a little patient with because there's no weeklies, but the moves out to those are a little bigger. So I took the 1 day move into account, but also added some because 10 days out, it's $24, Tom.
Yeah, let's break this one down. 1 month wide bearish put calendar to the downside, going out to that September monthly options. Those expire in 38 days. Buy that 200 strike put, and then selling in the near term August 21st monthly options. Sell that same 200 put. 1 month wide, paying roughly 275 debit. If you pay that debit, that's going to be your risk. $275 per spread on that. Might be trading, as Kevin mentioned, a little bit above $3. But remember, bid-ask spreads in the individual options are wide. So price discovery warranted. While the midpoint might show $3.10, maybe you start putting in a 275 bid, 280 bid, and then you can move that. So price discovery may be warranted on these positions just due to the lack of depth or liquidity and volume in some of these individual option contracts. But you can see here from the risk profile, you want the stock to fall about that 1 standard deviation move that they're pricing in over the next 10 days, plus or minus $24. That'd be lining up near that 200 strike. That's where you're going to get the most profitability. But you probably got a range between maybe 180 on the downside, maybe 220 on the upside to be potentially profitable on this trade. We always talk when we look at calendar spreads, volatility dispersion between the option series. So in this one, you're buying about a 58% implied volatility on aggregate. In the September options, where you're buying the 200 put, selling about a 77% implied volatility in that near-term August 21st monthly option. So that vol dispersion lowers the entry point price, but this is an inexpensive way, Nicole, to get some downside exposure. What you don't want to happen, you don't want the stock to rally. You don't want the stock to fall, maybe 2 standard deviations, go down like $30 or $40. That's where you'll start losing on the downside.
Thank you, Tom. Thank you, Kevin. And coming up, folks, it's the breakdown. We'll look at CoreWeave, which obviously has had an incredible run just for this month of August, up 24% month to date. The quarterly results. Look ahead. We'll be right back.
Stay connected to the markets in the Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke, big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant, I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Alex.
I'm Jane.
And I'm his mom. And sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Time for the breakdown. CoreWeave is set to report its quarterly results this afternoon. The street is expecting a loss of $1.17 per share on revenue of $2.54 billion. The stock has been rallying over the past 10 days for 46%. So let's break it down with Ben Watson, Senior Manager of Trading Services at Charles Schwab. Taking a look here at CoreWeave. What should investors be looking for, Ben?
Well, Nicole, CoreWeave, like a lot of other companies within this AI space, has two major issues that investors are paying attention to. One is CapEx spending and where that CapEx is projected to go for the next year. The question is that CapEx spending expectation going to come in somewhere north of that $28 billion to $33 billion range that they were looking at over the current year time frame? Second thing is whether or not they're able to convert their pretty substantial backlog in demand, which currently is sitting near $99 billion. I mean, that's a pretty hefty demand state to be in. If they can convert that actually into revenue, that becomes the positive side for this. If not, that becomes an execution risk. And I think that certainly suggests that CoreWeave has its challenges ahead, Nicole. I mean, it's a company in this AI hyperscaler basically renting that compute power space that requires a substantial amount of reinvestment to make sure that they've got enough componentry, they've got enough GPU power to be able to satisfy that demand. And that really is a significant risk here, Nicole.
Okay, well, at $89 and the recent surge we quoted, what levels are you watching, Ben?
So looking at the chart, I mean, this is a chart that has been relatively volatile over the course of the last year. And I've got a one-year daily chart here that oscillates from a high up near that 150 mark down to some lows in about half that, right around that $60 mark. Right now you see that move. And again, you're right. It's a pretty substantial move, up 24% on the month so far. Year to date, it's roughly equal to that, but it is lagging a little bit behind some of the other competitors in its space. It's running into a bit of a horizontal resistance here, creating a bit of a cup and handle type of potential reversal pattern to the upside. That would put the target out around to the 119 mark, but it's got to get through the 50-period moving average there. It's got to gain some momentum. You've had 3 or 4 days here ahead of the earnings announcement where it's just kind of been going sideways, and so that maybe suggests that investors are simply waiting to hear those key terms. Are they able to keep that revenue trajectory going? Are they able to monetize their backlog? And are they able to keep that CapEx spending expectation within reasonable range for a company like this? That could be a positive that breaks this price above that area. On the other hand, it's got a support level down around 68 and could see a bounce right back down to that area that it's tested once, twice, maybe 3 times here in the last couple of weeks. Nicole?
Ben Watson, thank you so much. A good look there at the chart of CoreWeave. And let's get Tom and Kevin back into the conversation. And Tom, in fact, you have an example trade for us now that you're going to share.
Yeah, you look at the performance of the stock. I mean, it hit an all-time high post-IPO of about $187. So we've been cut more than half from those levels. It's sitting at a key technical spot too. That convergence of the 50 and 200-day simple moving averages around that $90 to $93 level. So expectations pretty low. Revenue is supposed to grow over 110% on a year-over-year basis, even though EPS is supposed to come down. I think a couple key things to watch on this earnings event is look for capital expenditures in second quarter estimated to top out around $8 billion. That's up from $2.4 billion in the same quarter last year. So CapEx spend is getting out there. But then also what takes care of CapEx spend is backlog, right? Backlog is expected to increase nearly 250% to about $104 billion. So if that comes in above expectations, that might help the stock, but you've got to watch the CapEx spend also. Option market pricing in about a plus or minus $10 move on a 1 day post earnings expectation at this point. So I looked at a strategy that takes advantage of a directional bias, right? But then takes advantage of those implied volatility levels between the different option series here. So I looked at a bullish call diagonal. This is a type of strategy you only do if you think the stock is going to go higher over the next couple of weeks. I went out to the August 21st monthly options. So just about 10 days to expiration, bought the 88 strike call, basically in the money by about $1. And then I went up about $10, about what the standard deviation move the option market's pricing in is, and sold in the August 14th weekly options that expire in 3 days, sold the 98 strike call. So a bullish $10 white call diagonal, paying roughly about $4.90 debit on it. The debit you pay is going to be your risk. This debit is less than half the width of this bullish call diagonal. You can see here from the risk profile, you want the stock to go up about that $10 move up at or near the 98 level. But because you're paying less than the width of it, anything above about the $90 break even level is going to be profitability on this. So Kevin, this is a little bit more aggressive strategy, taking advantage of that vol dispersion, but you definitely need to move to the upside here in CoreWeave.
That's exactly right. It's a 1 week calendar spread with a $10 vertical embedded in there. That's what gives you the diagonal spread. Spending about $4.90, it's a $10 wide move. So you have a chance for a move that you don't have to worry about if it goes towards your strike or not or away. If it goes on the upside, if you're directionally correct on this trade, that trade will go up and it will flatten out in the profitable range. So yeah, a little more aggressive play in the calendar spread family. Like I said though, a built-in $10 vertical gives this spread a lot more teeth on the upside, Tom.
Yeah, we talk about those vol levels where you're buying the cheaper implied volatility than what you're selling. We expect a vol crush post earnings, especially on that short option you're selling. But this is directionally bullish. If you're more bearish on it, on CoreWeave, where you think it's going to top out, maybe go lower, and do a put diagonal to the downside, you're going to pay less than the width of it also, just due to that vol dispersion.
All right, S&P continues to fade here.
Looking for the stock to go up about that $10 move that the option market's pricing in, Nicole, but anything above about $90 a share is going to be
Tesla
profitability on this bullish call
moving lower. Rocket Lab starting to back off a little bit. Rocket Lab.
Today on Fast Market, we're glad you're with us every single day here on Schwab Network. I'll see you at 2 o'clock for the watch list, and keep it right here. Next Gen Investing is next.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
So what is unique about Schwab coaching is the community.
There's a lot of energy, like-minded people are learning with you. You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face to face with you and 400 or 500 of your closest clients.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
S&P, no follow through, continues to fade. Some stocks are moving higher. Some stocks like Palantir moving off the low. Palantir, big bounce.
Making a difference and
helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platform.
So we want it to be fun. We want it to be informative. And most of all, we want you to walk away with a skill set and independently be successful in achieving your goals.
Okay, so let's see what the Qs look like. Qs,
Welcome to Schwab.
S&P,
Real-time market coverage meets expert
IWM.
strategy. From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand. Schwab Network.
New York Stock Exchange, 2,400 components at highs.
SchwabNetwork.com.
Real-time access, data-driven analysis from U.S. equities.
Palantir, buyers stepping up. CBRS earnings.
Welcome to Next Gen Investment.
CBRS with earnings.
Coffee, and we check in on markets here at, of course, this noon hour in Chicagoland, seeing a bit weak.
Cerebras Systems has earnings. Tomorrow, after hours,
But we were
SpaceX,
for a stronger open, and we saw some choppiness.
SpaceX, looking for higher highs and higher lows. It's not going to go straight up every single day.
As well as like the Nasdaq lowered both
Dip probably gets bought.
to 0.3% on the day.
Intel just flat at the opening range high. Intel.
So it kind of drew my eyes away from the screen for a little bit. What I will say, Jenny, is that the nice thing about the markets the last several days is that volatility.
Palantir definitely on the move here.
See a far more range-bound market as it sort of chops around in new price levels. Needs to go the Andy Act before it can make its own all-time high. And I guess the question is that foreshadowing of more weakness to come, that sort of your market leading index wasn't able to reach new highs, or for the last 3, 4, 5 years, where it's been really tech, telecom, and consumer discretionary focus. It's really been Mag 7. So I don't know that we can
Palantir.
without Mag 7, but if you can get some other areas.
Palantir.
Also, here in today's video, not really focusing on very strongly here. So we are now basically unchanged on what's the news for NVIDIA versus its further AI invested some of these asset classes. But now here's a look at today's big four stocks that we will be discussing in today's show. A lot of volatility to be had today. We're looking at Ryan earnings, which is give back a good majority of its initial strength, but still has high session following a relatively mixed bag from its most recent quarter. Closing average Dow, which is also up about 5%. So I think it show on a brighter note, with travel shares continuing to impress now about 55% this year. Let's focus in on our first mover today, and that is Riot after a quarter that showed both the pressure in Bitcoin mining and also the potential upside from its AI data center pivot. Revenue improved 14% from last year, helped by growth in data center and engineering revenue. But the bigger story has been its shift into AI infrastructure. It's a 21 megawatt AI data center lease at its Rockdale campus, which is expected to generate roughly $9 million in contract revenue. But the losses in the quarter were still steep, right? Was it a GAAP net loss of roughly 68 cents a share, and adjusted EBITDA that was also negative. Bitcoin remains under pressure as well, with a direct cost to mine sitting at near so this is less really of a pure Bitcoin mining story and more of an AI infrastructure bet. But it seems like now the street has to weigh the potential long-term opportunity against near-term losses and major execution risk. And again, the same was looking a bit more positive that here at the open. I mean, still, it's at least there. And then like because as we've discussed, we've seen shares continue to somewhat inch lower.
Yeah, I think the Anthropic story is, this isn't a huge surprise in the sense that we've watched these Bitcoin miners. We've even pointed to the Bitcoin miners and said, this is sort of the broader neo cloud trade as these names pivot to where the opportunity is. Bitcoin is not enjoying its time in the sun the way it was, 5 years ago. Right now, that means for compute to basically power agentic AI and R&D and many of these companies, seemingly get this compute power and everything they need fast enough. Well, these companies that are mining Bitcoin are sitting on pretty powerful infrastructure. It was one of the big AI infrastructure theses of the last several years, which is watching those names transition away. And it sounded maybe far-fetched at the time, or a big undertaking at the time, but it's really not that different than looking to the NVIDIAs of the world, which were kind of niche gaming PC compute chips, seeing the opportunity for Bitcoin in 2017 or so, when Bitcoin was really becoming a big part of the story, or even in the last several years as those companies pivoted towards this AI. This is just that next layer of these companies seeing the opportunity and pivoting their business models to it. So I think the alarming piece is at the round.
Yeah, I think that's a good point. Also, you mentioned, I mean, this is pretty major deal for Trump, which is also an important part of the story that many people calling this like watershed moment for Bitcoin miners. But again, not seeing that full today and watching things just continue to turn lower in real time. But our next mover today is Rocket Lab. The shares moved lower pretty consistently so after its earnings. Investors focus more on the timing of its first flight. Management did state that stage 1 tank production is still on track for delivery to the launch pad by the fourth quarter of this year. But the company did not reaffirm its first flight before year end.
Palantir continues the ramp higher. Buying is pretty obvious. They bought buying the dip here. Look at that volume. Look at this volume here.
Its backlog also climbs to a record, and third quarter revenue guidance easily surpassed forecasts. But losses remain a concern. Rocket Lab posted a wider loss than expected, and its free cash flow is still negative. Now, this Rocket Lab is now getting growth versus execution risk, and today the market is putting more weight on Neutron and its ongoing timeline than, say, its strong top-line number. And so, again, very similar stories in the sense that, like, you're betting on basically, like, high growth and also a lot of significant losses on, like, a profitability, a GAAP, non-GAAP basis for both of these names. But seemingly, this stock has been in negative reaction pretty much throughout today's session. We're down about 3%.
Yeah, the financial picture is improving, but it's also a situation where it's like, this company is not priced off of what's going on right now. It's about the potential for what it could be in the next really huge catalyst. This is something I saw many analysts point out KeyBank and specifically Michael Ashok, who has an overweight 135 price target, called out this neutron rocket or this neutron product that is potentially being
Palantir looking good.
company, but it is a supply constrained marketplace. I mean, it's really SpaceX and these new companies that are trying to provide more alternatives. SpaceX is also making it a little bit, they're winding down that Falcon launch offer. So again, that's what the report suggests. So that's going to make it even more supply constrained. That brings more opportunity into place for Rocket Lab. But if you can't get the product to market, there's a lot you can do. So huge task is ultimately that neutron product. But if they get there, potentially a lot of opportunity. If they don't, it's almost biotech like right now. It's like it's all riding on actually launching this stuff and having it be safe.
And it's a really good point. Similar to the way you see like a clinical trials, I mean, make or break a stock's performance, frankly, on a year-to-date basis. We've seen it time and time again. Seems like there is a lot riding on the success.
Markets are just sitting here. All right, Cerebras is on, starting to move here. Cerebras, CBRS. All right, trying to break out. Cerebras trying to break out.
But after the break, we'll continue that discussion by diving deeper into the charts on both of those stocks, moving in opposite directions. Although today, starting to see actually a bit more parity in real time. Next Gen Investing will be right back.
S&P 500. Got support down here at 77.15. Oh, that music is annoying, isn't it? All right, let's go back to CNBC. That's less annoying, maybe? CNBC.
Actually using less memory because they can.
Talking NVIDIA. Okay, NVIDIA fading.
So that's not a base.
Last word, first circular finance.
If you want to put it that way, there's always some sort of vendor financing in any sort of large companies, even in the consumer segment. We see that all the time. So there is an element to it, but at the same time, let's not forget that right now, NVIDIA's revenue run rate is about $350 billion or so. I mean, 350 billion or so this year, and their free cash flow, they're going to generate more than 200 billion of free cash flow in the next 12 months. Wow. And this deal, the 500 billion, it's a base case assumption is that it's probably going to be over the next 4 years. So in the scheme of things, the risk that NVIDIA is taking, I think is very, very modest, given the opportunity out there.
All right, that was fascinating, guys. Thank you both. Really appreciate it today. Srini Pajuri and Eli Patel. Well, our next guest has been warning that some of the AI stocks had significant downside risk. That was 2 months ago, and the memory stocks are down 20% since then. Let's welcome back David Katz of Matrix Asset Advisors. And David, before we dive into the individual names here, do you have a point of view or a takeaway from this big NVIDIA announcement? This $500 billion in financing it's lining up?
I think it's a net positive for the industry. We think that, you've always got to be worried about supply coming on like it is, but the demand is just growing exponentially. So, grand demand is up tenfold and it could be up 100-fold in terms of the usage of AI. So we think for now, we're pretty safe, especially when you're talking about the biggest players like the NVIDIAs or the Amazons or the Microsofts, and their spending. We're very, very comfortable with that. When you get to some of the secondary players that are spending a lot and trying to resell things, we're a little bit more wary.
Do you think this is circular financing?
There definitely is some circular financing going on. However, for the biggest players, we're pretty comfortable with that. When you get again to the secondary and tertiary players, and there's the circular financing, we're more worried.
All right, so what about the names? For instance, in NVIDIA, when we talked last time, this was after we had the huge run up at the time in a lot of the memory stocks, which you were a little bit cautious on. What about now? We've had a correction. There's other parts like cyber names and networking and identification that are taking off. And then there's questions about NVIDIA itself, names like Lumentum, all these parts of the supply chain. Where are you an owner and where are you staying away from?
So we don't think you can paint it with a broad brush. I think you have to look at stocks on an individual basis. NVIDIA is a very, very powerful company. The stock had not done a whole lot, but in the last few weeks, it's had a good run. So we're comfortable holding that. Assessment of the next 2 to 3 years. Yet the stock recently sold off from 230 down to about 160.
SK Hynix back down to VWAP.
If you missed Qualcomm the first time, we think now's a good time to buy into it. They basically are going to be a player in AI. They have a dominant position in automobiles in terms of wireless communications. And one of the points that they made recently when we were talking with them is that we think in terms of cell phones, there's going to be a new cycle because you have to build out your cell phone and AI capability for agents on the edge, which means better phones to do that.
That's 17 times forward earnings. What about, the other big tech companies? Anything in the memory space that I can't imagine that being an area you really want to dip a toe.
Cerebras trying to break out. Cerebras.
But that's had a great run. It's pulled back about a third of that run up, so we're very comfortable holding it here. If it dips another 5%, you could buy it here. But beyond that, we think a lot of the stocks in that space are pretty fully priced. Another one that's in the AI build out is Generac. They make supply backups, so electricity backups. They had a great run. They've gotten 2 new accounts in terms of the hyperscalers trying to build out and get generator and energy backups. Stock had a great run, just gave a lot of it back. We think now is a very good entry point if you don't own it. We think the stock easily has 30% upside.
And finally, on the markets more broadly, as you said, the last time you spoke a couple months ago, you thought we were probably, I don't want to use your richly valued, we've gone back to the all-time highs for the S&P, but then of course this week we're running into a little bit more softness here. Even as
CBRS is trying to break out.
So for the end of the year, how are you thinking about the broad markets?
We do think we're at the higher end of the valuation range. Earnings have done great this year. Interesting point is when you have 20% earnings growth or more, that's usually not the best environment for stocks. So we think stock prices have gone up with better fundamentals. We think stocks are fully priced. We'd be a little bit more buying. So right now we like some consumer staples and utilities that are going to fare better if the market ever gets a little bit more turbulent.
All right, David, thank you very much. Really appreciate it. Good to see you again.
Absolutely. Great to be here.
S&P keeps fading. Nothing there. No bid in the markets.
On the up, I should say. They're 2% today as well. The builders are after existing home sales. We'll get the housing market polls from Ivy Zelman. But first, oil prices edging higher after Iran said the Strait of Hormuz won't open until their conditions are met. So what's the most likely path forward? We will dig into that next here on The Exchange.
This is The Exchange on CNBC.
As well, a low point here near 58 stands out as the bottom of our wedge shape there. So that could be an area to watch out for going forward if we do see price move downward. But other levels that stand out include highs here that became
We're getting rejected.
for the most part near about 64.
Okay.
A small gap near
Palantir.
71 and the 74 levels.
Cerebras, CBRS.
And a frequent stopping point for price.
Nike down.
83 old highs. We failed to
Terrible. Nike not doing much of anything. Somebody buying a bunch of calls in January, 4250 calls.
Next, our moving averages that we look at shows kind of a different picture here to our last chart. Our 3 moving averages in this case that are together are our 5-day, our 21-day, and our 251-day. Those all come together between about 73 to 77 or so. Meanwhile, our quarterly gold 63-day EMA here, 84.37 is where that one comes in. We failed to overtake it yesterday. That remains an area to watch to the upside. RSI interrupted. Green trend line has been broken, but we are still above that 50 midline, giving us more of a bullish outlook on momentum.
Okay.
Okay.
wanted to check in on here. His name does see a lot of volatility.
Markets are just sitting here doing nothing.
Into some of these
Starting to bounce a little bit.
for all of the technical setup today. Now it's, of course, we do approach trading Rocket Lab, for example, purposes, Alex. I mean, say you're still very much a believer in some of the orbital pushes we're seeing from these companies, and you're a believer in some of its growth metrics, and you're choosing to more align with that growth narrative than, say, some of the pessimism today.
Yeah, and the one thing I think we should note is it's maybe unlikely we're going to get substantial. Possible, it's maybe unlikely we'll get a substantial update again by the end of the month in terms of these timelines. But let's say that we don't, and maybe you just look at this company as a high beta stock with correlation to sort of the future growth type stocks. And that's what I looked at here. So this goes out to the end of the month, the August 28th weekly cycle, and it is buying the dip. This is a dip buying strategy. Buying a debit spread is risk defined, but it's also structured in a way here, Jenny, that if it is a short-term dip, does recover, it's an $8 wide spread, but the debit is only $3. As we're sort of buying the strike where it is and selling it out of the money strike up near some resistance levels to the upside, or in sort of an area where this could find resistance around 87. And let's say that you risk then 300, you'll notice you could make 500. So you have a little bit of a chance to make a little bit more than you have at stake. And so with that $82 break even, you would need some help from the market. But again, the thesis here being risk defined, seeing it perhaps as a short-term opportunity in a stock that has lost almost half its value, decent numbers, maybe having some delays. But if the market sees this as a short-term pop or drop and potential for a pop, this would be one that could bounce over the next several weeks, and you could risk 300 with a chance to make 5.
Yeah, looking for some opportunity here is, of course, we've seen some modest pressure, not selling off by any means, but always ways to find upside, of course, when we see some downward moves after earnings. But we will leave it there for Chartmaster today. Coming up next.
States over the past 50 years. So we've got these conflicting demands here, Kelly. Not entirely clear how all that's going.
Right, and how this, whether or not there'd be a toll on the strait at this point. Amy, appreciate it, Amy Jammers. Iran and Oman are reportedly in these advanced talks for a deal to manage the Strait of Hormuz. Is the U.S. going to resign itself to letting Iran control and toll the strait now? Michelle Cabrera is the CEO of MCC Global Enterprises. She's here on set with me. It's good to see you. Good to see you, Kelly. What do we know at this point is the state of affairs? We don't know a lot, but every day we're getting clues that post-war Middle East, and there will be a post-war Middle East, is probably going to look pretty different. The Omanis
You think?
The Iranians, and apparently the United States is allowing them to do that with the help of the Pakistanis. Trump says he's low-keying it. Bessent has said just this past week that the strait isn't going to matter in 2 years because all of these other countries are making plans to get their oil in different ways, and there's new pipelines, etc. And then you add to that the fact that there's people within the Pentagon who very much want the United States to withdraw from the Middle East and spend most of the Pentagon's efforts on dealing with China. But wait, to withdraw, this is interesting, to withdraw from the Middle East altogether, or to kind of clean out of, I mean, do they feel its mission accomplished, so to speak, with Iran? Let's start with the Strait of Hormuz. We defend the Strait of Hormuz since President Trump was in office, because back then, when the Middle Eastern producers didn't have oil, it was catastrophic for the United States. Jimmy Carter said we were going to defend the Strait of Hormuz at all costs from here on out. That's why we do it. But guess what? Things have changed. We're not self-reliant. We have all the oil that we need. Would it drive oil prices higher? Yes. However, they close Strait of Hormuz. I mean, it's not catastrophic in years, for decades. We thought it was going to be catastrophic. When you look at all the evidence and then add to that these reports that maybe we won't have enough ammunition, you start to see a path where maybe the United States says, we have our oil, the rest of the world is figuring it out, we need ammunition for something else. We push back the Iranians probably 10, 20 years when it comes to being able to produce a nuclear weapon. So you could see a very different, especially the attitude that the President and Treasury Secretary Bessent said, it's not going to happen in 2 years. And perhaps this wasn't the way they had envisioned. Probably not the state of affairs, but if they leave now, I mean, the U.S. presence in
CBRS is doing something here. It's not a whole lot of volume, so it's not institutions. Palantir back, almost back to opening range high. Palantir looking decent. There's a few things that are working. Palantir needs to get back up here. The volume, pretty obvious, the volume. A lot of shares there. Palantir.
I think there are people at the Pentagon who think actually maybe that wouldn't be such a bad idea. Actually, so we could be on the cusp of a very big change, even as we see this kinetic activity every single day. Right, it's ironic. So is the Ukraine-Russia war, which some say is now going to kind of come together with the Iran war. And we've seen a little bit of overlap there. I don't know if people are making too much. So when you talk about the U.S. Not being so active in the Middle East, that's a lowering of escalation, that's a lowering of oil prices. The worst case scenario is people talk about, analysts have really looked at whether or not you start to see the Iran war merge with the Ukraine war, because, for example, last month, Ukraine attacked ships in the Caspian Sea, an Iranian cargo ship that they said was headed to Russia. You can get to Russia from Iran through the Caspian Sea to provide military assistance for the war in Ukraine. Putin is losing the war in Ukraine. What is he going to do as he looks at his situation? So there's concerns that he escalates at the same time, and you start to see those two. The conflagration is the word that comes to mind. What would the U.S. response be? Well, that's the question.
What's up, bro? When are you leaving?
Oh, okay. I already told him. For example,
So happy my son's getting into golf, playing with his friends. Gonna take some lessons. I was looking at Tiger Woods. That dude, phenomenal. U.S. amateur champion. Did such a great job, Tiger Woods. So my son's been watching him as well. Hertz looking for more upside. Hertz looks like it's going to break out. Did I sell Hertz?
Right, when you look at the forward curve on oil, when you look at all the other prices, yes, all the other
HTZ.
they're elevated, and it's been problematic, but has been
December.
all of this. All right, Michelle, thanks, really appreciate it. Pleasure to be on. Michelle Caruso Cabrera. Coming up, Riot Platform striking a $9 billion deal with Anthropic to become the latest Bitcoin miner to pivot hard to AI data centers. Is it the final nail in the crypto coffin? That's ahead, with Bitcoin down 27% since Jan 1.
Okay, Hertz, I just bought some more. Hertz calls at the $3 strike. Hertz breaking out. cheap stock, cheap options, 70 cents.
crucial
Thank you.
to connect those electrical signals into optical and move on to other semiconductors to do other stuff, whether it's within the same building or which is increasingly part of their growth, as well as moving the information across broader distances. It's just as important as the semiconductor. You can't have one without the other. And I think there's a new understanding that companies like Lumentum and like its bigger partner Coherent are so important to that supply chain.
How much of the story in the short term is one of, I guess, a broader AI infrastructure trade that has sort of been repriced dramatically, once to the upside, and then recently, I guess, sort of this pullback. I mean, even yesterday, these stocks were hit pretty.
All right, looks like we're going to get something going here. Okay, stocks are catching a bid.
Is it possible that, like, no matter what they say, short-term sort of momentum can overtake things just because of like how volatile these stocks are?
I mean, we can talk about the stocks, we can talk about the business. I mean, your question is meant to be serious, and this is serious. Seems to be a conversation out there about what if things don't get built? What if not in my backyard happens to be a thing? What if building people complaining about data centers or water or power using keeps these things from being built? You just don't hear them from the companies. I mean, every single company we talk to says
Microsoft.
they cannot get enough capacity. They can't.
Cerebrus trying to break higher. Earnings tomorrow. Palantir. Palantir. Still driving back up to the highs. Snowflake, been consolidating. Snowflake looks like it's going to turn up now. It's above VWAP. Microsoft looking better. Microsoft looking a lot better. Doji on the daily.
A day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services.
Okay, Microsoft looking better. Microsoft.
For free. Stay connected to what moves markets. Download the Schwab wherever you are. I'm Nicole Pedalides live at the New York Stock Exchange.
All right, Microsoft. Paycheck.
Trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network. Welcome back to Next Gen Investing. Now, NVIDIA is
Palo Alto. Okay, these are back up to the highs. Zscaler, the best. Zscaler looking the best out of the group. CrowdStrike dipped early. Starting to find buyers. Datadog dipped earlier as well. Looking for the follow through. It was up 24 bucks yesterday. 50% into yesterday's price action. Zscaler looking the best out of the group right now. Airbnb bouncing. Airbnb. Okay, ABCD pattern. Airbnb. Airbnb is at 4-year highs. Okay, we haven't seen these levels since 2022. Last week we broke above 2024 pivot highs and continued yesterday. Airbnb, good earnings following through. Cerebrus fading a little bit.
Which they're going to work with these firms in order to basically come up with dedicated pools of capital at significant scale and attractive rates for NVIDIA. The goal is that they're going to raise $500 billion and maybe even more on top of that. This third-party capital is going to fund data centers now and the AI infrastructure build-out because, as NVIDIA says, the demand continues to grow, although there is some skepticism in the market as to whether all of this AI infrastructure build-out that we're seeing will actually overshoot demand. That remains to be seen, and it's up for big debate. Apparently, there are already a number of deals in the works.
Microsoft. Do I have any Microsoft left? I think I sold it.
What the chips are going to be worth at the end, because this is
After earnings, right? Microsoft. Yeah, I sold it. Okay, cool.
And that is up for debate as well. If you listen to some of the commentary today, there is a view that this is a huge claim because of the depreciation factor involved in these chips, because NVIDIA keeps coming out with new ones. So to other
Airbnb continuation. Looking good. Airbnb, Palantir,
onto their value and have a decade-long economic life. Basically, the best way
Amazon starting to turn. Amazon looks like it might be a day trade.
this is obviously being supported by equity and debt, and so much so that these companies are now turning negative free cash flow, which another big story in the market, particularly more recently.
Thanks, dollar.
Talking about this being sort of the next iteration of financing now, which he says is not circular.
Amazon looks good.
Some fluctuation in the stock based on some of the concerns around this. He says this is going to be supported by the Wall Street firms because initially we did actually see a pullback in the stock off the back of some of these concerns from the street that this was really about circular financing. It looks like some actually took advantage of that in the market with that dip. Kathy Wood's fund ARC snapped up some shares during that pullback. Interestingly, Marley and I are going to be actually talking to the team over at ARC on market because obviously they do have a position there, but the stock rebounded. And Jensen Huang came out and reassured the market that this would not be about circular financing, and the deal became somewhat clearer, although there is not a huge amount of detail still. There are still skeptics out there questioning the demand behind all of this. But then another trader guy is saying today, all the people you're going to bet against, are you really going to bet against Jensen Huang right now, the best performing stock in a decade? So, you know, I think that's where we've got the two
Amazon.
to why the stock's performing like this. Yeah, that's also kind of
Let's see how this plays out. Amazon headed back to VWAP.
almost 17% this year, but it does feel like there is some
Any news on Amazon?
perception that you don't want to go against the powerhouse of AI, which has been NVIDIA. So great points there, but really appreciate it. Sam Bonus, hosted Morning Trade Live and Market on Close for Schwab Network. Now, coming up next, we will discuss an under-the-radar mover in today's session that is Jabal after an upgrade at UBS. Next Gen Investing, we'll be right back.
S&P, no follow through. Came off the lows a little bit.
Trading at Schwab, powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly.
Palantir, almost back to the opening range high. Palantir. Got to get back to 178. High of the day, 178-ish. Palantir.
How's it going? First day, so sometimes, try again. You could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class. We have coaches who have been in the industry, around the industry for a long time. We have different formats because people learn differently at different times. We have webcasts running through YouTube all day, every trading day. We've got events that are making their way around the country.
Palantir. Trying to back up to the opening range high right there.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Welcome back to Next Gen Investing. An under-the-radar mover you may have missed today is Dabble. Shares are getting a nice lift following UBS upgrading the stock to buy, pointing to a multi-year growth cycle tied to AI infrastructure, but also healthcare demand and broader automation trends. Firm expects stronger revenue, better margins, and a potential beat and raise setup as we approach the next year.
But joining us now to break down the move and drop today is Ben Watson, Senior Manager of Trading Services at Charles Schwab. And so, Ben, I think we can play somewhat of a drinking game. How many times I've said today, AI infrastructure, but just yet again, walk us through one of the plays into broader infrastructure, which is Java.
Yeah, hi Jenny. This is one of those maybe under-recognized companies within that AI infrastructure space. So there you go, again. But that being said, let's go even further under the radar.
Palantir.
Where they've seen some pretty significant growth as well. And it happens to be actually in radar technology. So I thought that was kind of cool. They are one of the major components that underlie the defense systems that we have here.
S&P trying to follow through.
See that move up through that 325 level up through the 50-period moving average. And staying on the technical analysis side of this equation, decent momentum, fairly substantial volatility in this name, so the response activity going on here as well. Some of the concerns getting into this earnings announcement are going to be the fact that that price growth here in stock has been driven by a pretty substantial share buyback program that they've been involved in. The question remains, though, is this a company that has been able to move beyond their fairly thin margins? If they can start to increase those margins, margin growth, especially in the AI infrastructure space, it's going to be one of the things that investors are going to be looking for going forward.
But if you look at a little bit longer time frame, same picture, time.
Yeah, this is really kind of an interesting approach, Alex, because looking at a 3-year weekly chart, this is very, very strongly correlated with the NASDAQ. So that significantly suggests that it is tied to the build-out of technology that's being driving the tech-heavy NASDAQ. At the same time, it has had a lot of position on that longer-term chart, the 3-year weekly chart we're looking at here, bouncing up off of that, what is a 50-week, roughly 200-day moving average in that case, and making that move higher. Still a strong uptrend. It's not breaking out new highs yet, but it is pretty consistent in terms of that upward trend correlating strongly to the NASDAQ.
Yeah, I think you've got 20 to go ahead and break down what we're seeing. Of course, this nice outperformance today, JB. I'm sure it's off about 5.
All right. Just watching just a slow grind. Slow grind. S&P trying to push a bit higher.
Investor checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you with unlimited ATM fee rebates for cash.
Microsoft turned the corner. Snowflake fading a bit now. New York Fangs are kind of dead today. That I haven't moved that much.
Welcome to Schwab Network. Real-time market coverage is excellent strategy. Now, by the minds of pro traders.
My point is that they're getting a high rate of change in sales based on the guidance of the same rate of change of VVIX.
The biggest headlines, live analysis, breaking news, and strong trade ideas. Shows the different action. Break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way you're going into earnings. So that would be a further downside area to watch.
I don't even know if that could have been to leave everything behind, literally come across the entire market. I think that Schwab has been in investment for 25 years. We were producing up houses, opening up our business, and children. I think it's been there for us.
I want to. Help get my
Palantir backing off that recent high. Palantir. S&P still trying to push a little bit off the low. Not getting much, not much of a lift. It's 2 o'clock. Looking for institutions to tell us if they're interested or not. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, August the 11th.
So taking a look at a market that has been in the range of late, has been above $83. That fluctuation in stocks. Attributed to fluctuation in stocks. NASDAQ is down 1%. Industrial down 0.2%.
S&P no follow through. It feels like it's going to be a bear flag and roll over again.
So that's where we stand. So it's worth noting that 8%. Take a look here at just products and shows down. So 2 hours left. Close until the close of the street. So take a look at this one. Good afternoon, Tom. Taking a look at this market.
see it throw up a little bit of pressure on equities. I think one of the key things you have to realize is that the S&P 500 is still less than 1% below its record highs that it hit last week. So take it all within context, right? These geopolitical tensions that we had, think about it, since the end of March, haven't really negatively impacted risk-on assets such as equities. But that being said, we're not seeing a resolution that the market may be wanted at this point. That's why you're seeing a little bit of weakness here in equities. S&P 500 down 0.25%. It's not much. So it doesn't feel like the tremendous exodus from equities at this point. That's a positive, I think. We need to get some good news, some good headlines on the conflict on the Middle East, I think, to reignite maybe the bulls' interest in markets at this point. But, you've got to take it with a grain of salt that, hey, the market's not down that much. Yes, we're under pressure here a little bit. Crude oil is rising. We're back above $83 a barrel. That's causing a little bit of uncertainty in equities at this point. But at the same time, yields have come off of their session highs. We're above 4.71%. Now we're back 7%. So that's positive. Dollar's kind of firmed up here a little bit, but not making saying I think it's just going to take a little bit of salt that until we get some commentary from both sides. Finance Minister Pakistan was in Tehran today working on a potential resolution to the deal restricting moves. Although Iran says it's closed, we had some of the members of the administration coming out and said, hey, ships are getting through.
SK Hynix trying to push a bit higher. Palantir, little dip there, looking for a higher low. Looks like somebody took some profits off. SK Hynix, still trying to do something. Not much going on. S&P. Okay, we're right in between these two levels. A lot of negative gamma. Prices are just kind of sitting here, not seeing much momentum in terms of institutional buying. Okay.
Yeah, that's actually lifting some of those financials, whether it's a pop, KK, so this is basically between what we thought was a deteriorating commodity chip space where they make these chips, these racks to the last 5 years, and you got to re-up them. They're turning those into an asset class at this point and taking some of the heat off of this CapEx spend is much more the hyperscalers going to turn it over to the retail side of the industry at this point. So mobilizing this $500 billion potential, maybe might be a benefit for the but it also might be a benefit for investors that are looking for a way to diversify back into build out hyperscalers taking debt out. There's probably going to be some risks involved in this packaging of these investment products. There's some concerns there. But if you look at, these asset managers that have been eager to deploy capital into digital infrastructure.
All right, we just rolled over. S&P, no Momo, no momentum. Apple just rolled over. Microsoft starting to see profit taking. People getting nervous, it looks like. Rocket Labs pushing back up now. Rocket Labs.
They're giving you reassurances in this potential new asset class. That's probably a benefit for investors. And maybe that's why you're seeing some
Rocket Labs pushing back up. Here's Rocket Lab. Pushing back up. Back above the 200-day.
NVIDIA also today working on its the Nemotron 4, new open source AI model to reportedly compete with the world's leading open models. So you have a development every day with NVIDIA, and of course, Jensen often being right at the forefront of the story. So today, as you noted, down about 0.25% for NVIDIA, but many of the analysts on board think that this was a very positive move that NVIDIA did with the asset managers. Last but not least, let's talk about inflation. The data will be out this week. Last week, when we got our jobs report, we saw wage growth. Of course, it was less than expected, less than inflation. And so at this point now, what are we anticipating? What are you watching for here at the CPI, PPI prints?
Yeah, I think it's, if it comes outside of, even if it comes in line with what they expect, I think it might be a market mover. It'll definitely affect or have some impact on the yield market at this point. If you look at it, the expectations on year-over-year numbers, the headline's supposed to go down to 3.4.
Rocket Labs pushing away from VWAP, pushing back up. Still got a pretty high implied volatility.
Down a little bit. Consensus estimates for the headline month over month up 10%. Exclude energy to flat, maybe low. That could lens towards the end. Take light out of yields also. But if it comes in a little bit higher than anticipated, if you can see a pullback in the market, right now, the CB Fed Watch tools predicting 25 basis point rate hike at the September meeting. It's about a 50-50 chance at this point. That was down the low 40s at the start of the week. So that's kind of ramped up a little bit. Its yields had kind of firmed up with what we saw at the end of last week. So yeah, there's a lot to kind of digest here in these numbers. I think it will be a volatile post the 10% increase. But if we see this trend forming where we had some volatility in the energy markets, some good components within CPI that could trend lower, especially look at rents and the housing markets.
Futures lower. All right, hedge flow line is starting to turn up, so maybe we get something going here.
July. So yeah, a lot to kind of digest. But if it comes in lower than anticipated, that could be a move for
Rocket Lab.
Searching for direction over the last couple of sessions here.
Rocket Lab turning back up.
Today, had some concern. Once again, he said the biggest problem is inflation. And so that leads us to these conversations that we have. But as you noted, the likelihood of a hike has now.
Let's see McDonald's popping up on my screen. What's McDonald's doing? Still consolidating McDonald's. AT&T and Verizon, T-Mobile, these are all turning back up. AT&T. This is AT&T. AT&T, Verizon, T-Mobile, those are turned up. T-Mobile. Okay, looking for that to break this downtrend, T-Mobile. All right, looking for it to break this downtrend. Got this level here. 1, 2, 3, 4, 5 spots it hit. Pushed higher, looking for it to push this way. RSI rising. Looking better. T-Mobile. I do have a position in AT&T. Looking for this to get back above the 200-day. And 25.30. 25.32 or so.
You bet on this and win. You bet on this and lose. This and lose. This and win. This and lose. This and lose. This, lose, lose, win. Lose, lose, win. Even this, lose. Betting isn't investing. Investing is owning. It often rewards patience.
Rocket Lab trying to push a bit more now. Rocket Lab. Watch Rocket Lab here.
Don't bet on it.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
ELAG.
AMD is moving. Okay, cool. AMD looks good. AMD got a hammer.
Back to the watch list. We're watching App 11.
Hammer on the daily. AMD. Let's see. AMD. All right, it's only 2:14. We got an hour and 45, hour and 46 minutes to go. Okay, look at the 60-minute. Needs to get above that 60-minute 20 MA and get that to turn like it did over here on the 29th. AMD might get something going. Rocket Lab. Okay, it's moving back above the 20 EMA. Okay, looks good.
Get all your big picture, but some of your thoughts here on CoreWeave ahead of the real report to out.
I think a lot of really high expectations here because you saw the monetization coming from SpaceX, Microsoft, and Google. And so I think what they're going to really have to do is beat expectations by a lot, showing that their business model is actually tracking the same way their competitors are.
What do you think about what you heard from Google and Microsoft? How does that fit in to what you may or may not hear?
Rocket Lab.
Well, I think monetizing was something that we didn't necessarily expect to happen. So since they're directly in that business of leasing out NVIDIA GPUs,
60-minute Rocket Lab.
structure look like? What is their margin? How are they doing in terms of pricing? We would expect a lot of capacity out there and a lot of demand, but what does the monetization really look like? They should hopefully still have about 100 billion in a backlog of orders. If they can break through that and do even more in terms of a future backlog, that's better for profitability. These are really high bars for the stock to cross, but that's really what the market expectations are given the strength in this area so far.
But we are waiting on some big numbers when we think about cloud and AI overall. But we are waiting on some huge numbers when it comes to the year over year. And in fact, the earnings per share may fall over 3%, but the revenue on the other side expected to grow. They're somewhat dramatic, aren't they, when you think about the year over year? Is that what you expected at all?
Given their business model where they build up the demand first, book the orders, and then go out and spend the money to actually build the actual compute, this is how they go. And it's a little bit inside out, certainly from a traditional business model, because that EPS number could be a little bit shocking.
Yeah, the revenue is expected to jump over.
Amazon, Apple dropping off. That didn't do anything. Snowflake dropped off. Broadcom dropped off. Meta. All right, the New York Fangs don't look that great to end the day. Let's see where the money's flowing. XLB. Let's see where the money's flowing. XLB. Materials were doing pretty good. That's trending. XLC Communications. Not so much. XLE Energy. XLF Financials. XLI Industrials. XLK. You can see where XLK is not performing. XLP. XLU. All right, turn in the corner, XLU. XLV, trending. XLY, flat. XRT, flat to lower. IGV, software, fading but trending in a bullish trend. So materials, utilities, turning the corner. Industrials, okay. Materials and XLU, those look good. Tech, XLK, taking a break.
So they have various business units that they can show growth in, and that's what the market's going to be looking for, is not just monetizing compute, but how is everything else doing in that full stack.
Right, full stack versus one thing. I mean, just.
All right, looking at NVIDIA, I see, Doc, you're looking at NVIDIA, dollar. Okay, so that's below.
They lease it first and then they build it second, whereas Nebius is definitely
Amazon, flat. S&P,
to the end user. So between the two,
below the 20 EMA.
Situation. Do you think that we're getting criticized?
if they don't get the top pick, which could be the triple digit range as well, then you're going to have problems explaining that they have enough cash to make those investments. So that's going to be the tipping point for Nebius.
Right. And then just your big picture of you guys. And we were just talking about that. What's your big picture view on that?
One of the biggest concerns on the enterprise, the input scale, costs are different prices. Memory chips, all of that part of the physical stack, tech stack is getting more expensive. But can those companies actually physically pass prices through to the consumer? We're really aware of this Apple, which is saying that they're going to have to raise prices because their memory chip backlog is getting more expensive. Otherwise, a lot of this isn't really to the consumer. ChatGPT is lowering prices. So in terms of the CPI tomorrow, I think we actually could see a bit of easing there and take some more pressure off that.
Expect some big records between
Steadily, I don't see any real sharp upticks because I think we're kind of in this range bound. But earnings are very strong. As long as that earnings growth stays in line, then yes,
S&P still fading. Okay, no relief here on the S&P. We just keep trending lower. 10 EMA is down and to the right.
and Nokia. The watch list. We'll be right back. The Dow's down 111. S&P is down 22.
Kick off the morning with the decisions moving markets. Morning trade line that breaks down the macro moves driving the price action from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning trade live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Is fast market built for traders who want more. That's headline.
Walk you through trade ideas, structure, risk management, focus on execution, options, to earnings, to volatility plays. There's decades of trading experience.
Real-time products and sectors. We deliver what active traders need to stay ahead. Fast market weekdays at noon Eastern. Live on Schwab Network at schwabnetwork.com. Right here on the watch list, markets currently it's growing. That's really huge. Growing commercial areas. Obviously, the company has been solid. It's today.
All right, S&P just dropping. Okay, spiders. I have those put flies. How they doing? Put flies, SPY.
Which has been up about 75% year over year.
5 put flies.
Yes, good afternoon. You know, not really any news feeds for any of these particular names here.
SPY. I have those put flies. SPY put flies. These put flies are still a long way away. Expiring at the end of the week.
So a neutral to bearish trade, $9.76 million was the credit.
I was hoping that we'd get more of a bid. I guess not. Some rotation. It looks like rotation, mostly rotation. We got materials and utilities. Energy, utilities. Materials look a lot better though. Materials, energy, breaking out. Can't chase energy here. You need to buy energy on the dips, in between news, utilities, bouncing off the low, double bottom on utilities, industrials, just sitting here. Financials we talked about. The banks are trending. Banks are trending. Citigroup, JP Morgan. These are all doing well. Bank of America. Morgan Stanley less so. Goldman Sachs. These are kind of lagging a bit. Wells Fargo and PNC Bank. PNC looks okay. Citigroup, PNC, JP Morgan, Bank of America. Those are all doing well. The banks. You also got Visa. What's SoFi doing? SoFi. All right, still consolidating in this stupid range. MasterCard, Capital One Finance, Synchrony, SYF. All right, they look okay. Banks look good though. Banks look good. Rocket Lab. Hit the 9 EMA this morning, bounced right back above the 200-day, so still got some sellers here. The previous couple of weeks, though, there were buyers into this high, so it looks like they're back. We have to move a bit higher to get above yesterday's closing level to give us a green volume bar. I suspect there's a lot of buying in here, though. Rocket Lab's coming off the low. 60-minute. We're trying to get back above the 20 EMA. So this could be above it tomorrow. So have a little bit of patience. All right, S&P continues to move lower.
Take a look at India, which is a stellar performer. It's up about 130% over 1 year. Some of your thoughts here on the action, the options trade you found. The stock today is up about 3%.
So this one is kind of the inverse of our first trade here. This one is selling puts. So minus 20,000, June 17, 2027. So the next June here, seven strike puts at an 88-cent credit here. So neutral to bullish outlook is the directional bias here when you're selling puts in this fashion here. $1.76 million credit received is the max profit. $12.24 million max loss potentially if the stock were zero. So this one. Now, in terms of our risk to reward outlook here, it's the opposite of our past trade here. So the break even 612, 35% or so to the downside. The expected move 5.26. So this one is kind of well within that boundary by quite a large margin here. So, but this one would be one that you would want to stay above that break even when you're selling a put here. You would want to just kind of keep the credit that you receive from this. Or, I mean, you could also take the assignment on the stock if it were to have a move below that strike price here. In this case, though, 21.8 is the percent of the total options volume, this single trade here. The sizzle was actually slightly below average, though. 0.9 is where that one comes.
Okay, so materials definitely a place to look. Materials, utilities. Make sure you're looking at these levels, these sectors. XLE.
Right now it's down 1.5%. That's so much more when you watch this.
Everything else is just kind of marking time. Palantir did bring pull back a little bit. Looked like it was going to bounce a little bit better, but we're at the highs. Palantir.
Are watching next. Stream Schwab Network live at schwabnetwork.com.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, giant TVs, everything in one place. It's like Schwab. Everything investors need, all in one place.
Okay, what is ELF doing? I haven't looked at that in a while. ELF.
Low tick alert minus 800.
Low tick alert.
Invest your way with Schwab.
Low tick alert.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis.
Okay, that was a pretty decent dump there. VWAP down to the right all morning.
In-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Okay, where is hedge flows headed? Back down. We got this level right here at 77.15. Did we hit it? 77.15 S&P. We got an hour and a half to go. 77.15. 77.15 GEX. Okay, 77.15 is right there. Woo! Got an hour and a half to bounce. Not much luck. Don't want to be buying puts at the low of the day here. I already have put flies that are just still out of the money. I'm hoping that I don't need these. I'm hoping that markets will continue to push a bit higher. Looks like rotation. Looks like rotation into materials. Okay, materials at the high. Energy. Flagging at the high. Energy. Utilities. These three sectors are seeing a lot of activity.
CEO and co-founder of that space. So glad you're both here. As we take a look at Rocket Labs, the stock right now.
Financials, of course. Financials are doing okay. Okay, those are higher. Financials. Banks. Industrials are up 0.6%. Industrials. XLI.
Stock is down at all. They also have a lot of expenses.
It's up a little bit today.
That's crushing margins in the short term. So that's a near term word.
Okay, S&P 500 though. 77.15 right there. 70, I think it's 77.60 is the GEX for now. 77.60.
they've had a bunch of acquisitions that have enabled them to do a lot of things. So they can basically do anything in space. And they have a supply chain that is potentially second to none. So
Looks like profit take, a little short covering now. We could roll over one more time. Could roll over again. Tag this 77.15. Okay, you can see it right here, 77.15. 0 day. 99 percentile.
Let's get to the big picture. First up, we see demand in space industry. Tell me a little bit about your thoughts.
Yeah, this space industry is really a frontier economy at this point. You've got a really very large growth curve ahead. It's a long-term kind of play as far as the stock price goes, and it requires a lot of capital. So it requires patient capital. It requires a lot of that over time. That's what we're ways down that path, and they're vertically integrated with satellites and launch vehicles, and now they require things like iridium. So they've got a very positive outlook in the long run, but there's going to be a lot of pain and suffering along the way.
While we're showing some of the competitors or peers in the group, when you talk about long-term, Jim, how long are we talking about when we think this will be a winner or really will succeed? What kind of timeline are you looking at?
Well, I think it already is a winner. There's room for a lot more winners in this market outside of SpaceX. SpaceX, some people think it's going to become a monopoly, and they're not.
Rocket Lab turning back up.
And are servicing their own internal capabilities, taking their launch off the table, which brings companies like Rocket Lab and Phantom Space, which I run, into the fore. And so I think if you look 10 years down the road, you're going to see as much as a 10x uptick in valuation on companies like Rocket Lab, just simply because there's such a competitive mode to get to where they're at. Any of us that are in this business, it's a 10-year competitive mode, and just keep building on that.
And Colin, we're talking about the satellites, the rockets, and the demand is there. And I'm seeing that the company said it has more upside when it comes to rocket prices. Pricing power is imperative, is it not?
Well, it certainly helps that they've been pretty firm on saying we're not going to give early discounts because they think that they are giving a very good value right now. So the pricing power seems very strong, and it does seem like that's unlikely to change. Of course, you never know the future perfectly, but right now space is very much a frontier, and there seems to be a tremendous amount of growth potential.
The margins that are expected in the next quarter, as we continue on, we're expecting some big acquisitions. Acquisitions rather than just acquisitions. And so we're expecting some better.
Yeah, it's hard to know for sure. They expect to go down to something like 36% margins. To me, those are a lot of short-term costs. I would think that their margins can return back to where they were.
Yeah, Electron, years ago, different back then, and they are developing a much bigger deal. So I think long run, it's just the market should be down. That's one of the reasons why launch revenues are strong. They're limited by the size.
So many of these companies that have such a
Jim's here. SpaceX, of course, comes to mind. Several others. Ship out. Tell us about some of the competitors.
So I look at it as the dominant players. Satellites and constellations.
Too much to expect this to bounce. I think this is going to roll back over again. Just feels like that kind of day. Okay, Rocket Lab turning back up. Rocket Lab, RKLB. Rocket Lab back up. Looking good. Rocket Lab looking good.
Launch is scarce today. Continue to be scarce. Probably as long as I live. I just don't think that there's going to be a solution to that because once you fix the rockets, you still have a constraint at the launch sites and our launch ranges.
Yeah, and Colin, you noted the millions of new launch contracts. And final thought here.
Yeah, one of the problems that I just wanted to make sure we went over is they do have their new neutron rocket, and the fear on the conference call was that that's getting potentially delayed into next year. What the CEO said about that is it's not so much when you get the first launch, it's when you get the cadence. So when does the 10th launch happen? I think that that's an appropriate, I mean, perhaps it's promotional, but it's an appropriate way to think about it. Number one, is that important? When you can launch again and again is really important. And that's part of why I do tend to think the future looks pretty bright.
Yeah, I mean, with the company, we look at the record revenue, Neutron debut, and as I was talking about it, $437 million in new launch contracts. Also for Rocket Lab.
What is SpaceX doing? SpaceX diving.
Co-founder Phantom Space. Coming up, we'll check in with the 5TX. CEO this morning. Watch us. Will return just a quick break. We'll be right back.
Okay, Rocket Lab. S&P rolled right back over like I figured it would. Looking for a higher low. Not happening.
Sometimes, you could have done that. Same goes for where you invest. Level up and
Microsoft trying to hold on. That's the only New York FANG component that looks good right now. Microsoft. S&P. Nada.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Decimal with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
to the watch list. I'm Nicole Pedalides. It's time for our ETF watch list segment. And joining me right now, Christian, founder and CEO of Amplified. Yes, rang the bell there at the CBOE. Pretty exciting, and congratulations to you and your Amplified team. I was noting your Yield Smart fixed income suite of ETFs. Tell me a little bit about this group, for example, HYGM, the Amplified HYG High Yield 10% Target Income ETF. And there are
Rocket Lab's looking better.
Yeah, well, it was super exciting to be here at the CBOE, bringing the opening bell. And yeah, our Yield Smart ETFs are really trying to put the fixed back in fixed income ETFs. Think a lot about fixed income ETFs. You don't really know what kind of yield you're going to get from your investment grade corporate, your high yield, or your treasury ETF over time. What we've designed our products to do is target a certain yield. So like you said, in our HYGM ETF, we're targeting high yield bond ETFs with a 10% distribution target. That's achieved through interest income from high yield bonds, through ownership of HYG, but then also option writing so that we hit that 10%. Even if rates fall back down and bonds see some dissipation from interest payments, we can subsidize that with option income. So this is all about putting the fixed back in fixed income. We think there's a lot of investors who want more yield and a fixed amount of yield from these types of allocations.
I also saw the investment grade when you talk about 10%. This one's
Rocket Lab continues.
QDF. Tell me about that.
Yeah, so LQDM has a higher yield target of 12% versus HYGM at 10% because the duration of LQD bonds are just longer than HYG bonds. So there's a little bit more option income to harvest. So we're targeting 12% income from interest and options from LQD ownership. An investment grade ETF like LQD, we're able to deliver more than double the yield, again, through interest. And this makes a lot of sense for investors who are yield starved or simply just want a target of fixed yield.
You said how there has been a demand for this type of fixed income fund, right? And these three income funds that we're talking about, the third one being a TLT fund. That overall monthly distribution potential, it's designed this way, and it complements what else someone has in their portfolio, right? You continue to expect to continue to grow in the fixed income side of funds.
Yeah, you're exactly right, Nicole. This is a great way to, I think, augment existing fixed income exposure and potentially raise your yield and get it from an area besides interest, option income. Oftentimes, option income can be more tax advantaged than interest income. And yeah, we expect to continue to expand this product line at Amplify. I think this is a great way to use options, not just in the equity side, which we have a lot of equity income products that use options, but also in the bond side. I think it's part of the toolbox that's been overlooked. And we're trying to bring these yield smart fixed income products to the market for investors to take advantage.
Yeah, and what do you think about when you look at bond yields right now, today? We're in a moment where this morning we saw yields at the highest point in some time. I'm sure you're watching them tick by tick.
Yeah, we really are. And, you know, it's going to be interesting to see. It seems like they're going to be going higher here.
Okay, Rocket Lab continues. Rocket Labs is on the move.
Very uncertain.
Okay, Rocket Lab's back above 20 EMA.
So the neat things about these fixed income option ETFs that we offer is that option income actually acts as a hedge against potentially rates rising, or acts as a fuel source for more income should rates go down and you see less interest from your bond ETF, but you need to create a larger distribution for your retirement or your savings needs. So I think these option ETFs in the bond area really give you optionality depending on your concern about rates rising or potentially seeing things being cut eventually by the Fed.
Christian McGinn, founder and CEO of Amplify ETFs. Well, the very latest when it comes to crypto, Bitcoin, Ethereum. This is our crypto report. Just after a quick break, I'll see you on the other side. This is the watch list. Markets make funds, traders make decisions. From brief shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market Off. And the 3 p.m. Eastern.
I just took a little bit of ELF off. It's just kind of flagging right now. I'll buy back if it gets back, say, to the 9 or 21 day ELF, ELF. Took some of that off.
Over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures.
Amazon trying to turn back up. Amazon. Rocket Lab looking good. Amazon. Amazon on the move here. Amazon with a nice bounce.
Hey, investors, you know the market moves. Schwab is here to help you with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing,
Okay, Rocket Lab on the move.
saving, spending, or even retiring,
Opening range.
for market insights, live support, powerful trading platform.
Okay, Rocket Lab.
100 branches, all at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Rocket Lab on the move.
Welcome back to the watch list. I'm Nicole Penelides. We're live on the floor of the New York Stock Exchange. It's time to take a closer look at Bitcoin, Ethereum, and more in the crypto report. Let's welcome Michael Willis, co-founder, CEO, Cyberport. Thank you so much for being with us. What's front and center in the crypto market today?
Nicole, we're right in the middle of a Bitcoin winter, a full-fledged crypto winter. It's summer. The Clarity Act is stalled. We have a cold card hack last weekend. This past weekend, we had a soft fork. So I think there's a number of reasons that we're seeing lows right now in the crypto space. And this particular crypto winter mirrors 2022's crypto winter to a T. And if we continue tracking the 2022 crypto winter, we're looking at potentially pushing into the fourth quarter before we see the uptrend that we're expecting.
Look, Bitcoin had 5 straight days of inflows. In fact, just recently, we started to see some inflows, and that reversed the trend that we had seen of outflows from June into July. And a lot of that may have been dependent on looking toward the Clarity Act. We'll talk about that in a moment, but also we have AI spending and margin calls.
SpaceX kind of flat. What's SpaceX look like? SpaceX. Okay. Had a nice rally last week into yesterday. Giving a little bit back today, not surprising. Not going to go straight up every single day. Looking for a higher low and a higher high. Cerebras has earnings tomorrow. Cerebras. Long-legged doji on Cerebras. Okay, 50 days right there. Got earnings tomorrow. Expecting Cerebras to knock it out of the park and come out of this base.
Goes through a washout, much like we're seeing now. You can expect the down 50, down 60. And OG Bitcoiners know that's par for the course for crypto. That's one of the reasons that we don't think most investors, average investors, typically down 35%. If new found investors start to lose their comfort level, if they're down 40 to 50%, they tend to sell out those positions. So
this week to 75% portfolio, and we anchored them in the S&P 500, and then 25% Bitcoin, crypto, position is in balance that department. So in terms of the catalyst for taking it higher,
Cerebrus looking for more upside. S&P managing a little bounce at that 77.15 level. Okay, got a little time to maybe make it back to 77.45 or so. I wouldn't bet on it. Feels like a very poor risk reward for a bounce. The money's been made. There's an hour left. I'd save your arrows for tomorrow. Rocket Lab looking pretty strong here. Rocket Lab. Nice move on Rocket Lab.
In a down market like this showcases why we do the 75-25 methodology, because whereas Bitcoin is down 45% the last 12 months, our flagship 75-25 ETF EBB, which is 75% S&P 500, 25% Bitcoin, is up 1% during that down 45% period.
And just quickly, your thoughts on the Clarity Act, and there's at least one legislator who thinks it's still going through. It seems that they go on recess. I don't know what you think, but you are expecting more adoption for crypto. Do we need the Clarity Act first, or is that adoption regardless? A quick answer, please.
The adoption's happening regardless.
Rocket Lab on the move.
Bitcoin is not held hostage by the politicians. It certainly would help give clarity to the institutions. So the quicker that happens, the better. But whether it pushes through this quarter, next quarter, or even first quarter next year, we believe it will make it through at some point, and that's going to give the institutions a bigger push.
We've been in somewhat of a range. I mean, there hasn't been extreme volatility.
Rocket Lab running.
Yeah, I think when you see Michael Saylor, basically the top spokesman for Bitcoin, one of the largest holders in the world, selling off 3,000 coins a couple of weeks ago and another 1,000 coins plus last week, and really Bitcoin shrugged it off. And this is something that's actually exciting to see. When you see $40 billion worth of volume in a day with Bitcoin and heavy days up to 80-90 billion dollars of volume. This is what you like to see in an asset class that is now in the top 10.
Rocket Lab 60-minute. There you go.
500. So we're seeing everything that the excitement that Bitcoin originally brought, and the reason it took off is because people saw it as better engineered currency than the US dollar. But as it's evolved, I think a lot of people are buying it as a new technology, as a new asset class, and they don't really know the original reasons that what made Bitcoin great. But for all of these reasons, we believe that our outlook in the future is still really strong.
Michael, thank you. Michael Willis, co-founder and CEO, Cyber Hornet. Coming up, we're going to have a continued programming here on Watch List every day at 9 a.m. Keep it right here. Market on closes.
Schwab Bet Investor Checkout built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get with Schwab. Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of
What is it that they're getting? A higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. Break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Not insights, actual data, veteran traders, and trusted financial journalists streaming live. Schwab Network, streaming 24/7.
Okay, looking good. Rocket Lab is going. Rocket Lab is going.
Mom, my grandparents moved here. They know what our family.
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
All right, looking pretty good here going into the last hour of the trading day. Rocket Lab following through. Get something to be jumping up and down about. Palantir, nice recovery. All right, Apple's starting to turn the corner. Apple.
Investment to the unique opportunities it can provide investors. Then
Okay. We'll come back to this in a minute. Let's see.
take us through what you've been watching today.
Rocket Lab's going.
Change line right now slightly lower. Some of the biggest names on Wall Street to source $500 billion in financing for the infrastructure build out for AI data centers. The group includes names like Apollo, BlackRock, and Blackstone, to name a few. The deal will reportedly use top
Oh boy.
and are set to start coming to market in the next couple of months. On holding, also suffering its worst single-day drop on record after a second quarter revenue miss. The company also missed on its full-year guidance. It trimmed its sales growth guidance down to the low 20% range from a prior forecast of at least 23%. And shares of Hims and Hers are also lower after swinging to a loss in the second quarter. Gross margins also fell to 64%, down from 76% a year ago, as results were impacted by a one-time charge of about $81 million during the quarter. That included expenses related to its acquisition of eucalyptus, restructuring of its weight loss strategy, and also its legal reserves. Lots to get to today, but first, let's check in with the markets as we near the end of this trading session today here. We have a mixed picture. We've been sort of seesawing directionless through most of the day. We were higher to start the morning. We were entirely lower now. 1/3% lower at 77.24 right now. The Nasdaq about 0.5% lower, 29,470. On the Dow, we're 1/3% lower here to 53,801 right now. So 2K though maintaining its place in the green here. 0.4% at 3,030.56 right now. As we look at the 10-year burn, 468, holding pretty strong right there today. The dollar still hovering below 100. Gold is at
per asset. Same for Molly, as you just pointed out, it really feels like another wait and see market today, one that's looking for some direction at the top of the legal time. The next big catalyst we know will be the July tomorrow. Yields have backed off a bit today ahead of that, as you pointed out. But market watching out for any diplomatic resolutions
All right, Riot's starting to turn.
until its conditions are met. And oil has really
That's funny.
for the earnings season.
Oh boy.
Meantime, meetings have been high today.
Tesla turning up. Watch Tesla.
Down Mali. But software has also been performing better lately, which could also be contributing to some of this, although software is having
Yeah. Okay.
But you forget that already.
Well, yes, now I got go. This is usually right, but I thought what I was going to somewhat disagree. Say you mentioned that the 30 years, 520, etc. Meanwhile, the stock market's at a high. How much does interest rates really matter? There's an eternal debate about how much interest rates really matter.
And which matter a lot. The only reason they don't matter as much as they maybe ordinarily would is because earnings right now matter more.
But that's sort of the point that you have interest rates at cycle highs in some cases, but we've had some version of the debate. What's more important, the Federal Reserve / interest rates or the AI story? And I have for a year come down on the side of the AI story, and I think that's borne out quarter after quarter after quarter. Rates are at a high, but if you look over since the start of earnings season, which has been exceptional, as you noted, half the index is higher than the market, which is what you would think. Half the sectors are beating the market, which is what you would expect. It's been a perfectly normal stock market over the last 2 months, even as interest rates have continued to higher. So it's unquestionably less important than the AI investment theme.
But that's why I think we said at halftime today, bullishness abounds. It's like,
yeah,
everybody seems like they're bullish. Price targets now, 8,000 feels like a floor. And you've got some higher targets. There was somebody talking about 9,000 potentially yesterday, year end. But that, I don't know about year end, but nonetheless, you don't see a roadmap to higher numbers, higher highs.
Yeah.
Because earnings continue to go up.
Yeah, and let me be clear. I don't think a rate hike takes this market down permanently. I think that, and Jonathan Krinsky is the one that made this point, I believe, in his note today, so I'm not going to take credit for it. He gets all the credit. But the risk in stocks, if we have a hot inflation print tomorrow, is to the downside. Bonds already priced in a hike. Bonds have already been rising. We've seen yields go up incrementally. We've seen long yields go up even more. So bonds are prepared for the surprise of a hike or the surprise of a hot inflation print. Stocks are not. So I think you see volatility in the short term if we get a hot inflation print. Then we get through that September meeting, and to your point, it's about what happens after that. If we're trying to draw parallels to the 90s, which we will constantly do until this is all over, the hiking that began in the late 90s didn't end. It was a hiking cycle, and then everything came down afterwards. So that will then be the next debate. If they hike in September, are they going to continue hiking, and is that the beginning of the end? And how long can earnings really overshadow that risk? And I think it can.
Okay, no follow through. S&P just keeps getting sold every time it bounces. Every time we bounce, we get sellers coming in. Rocket Labs. Every time we bounce, sellers come in and just push it back down. So all right, let's take a look at the New York Stock Exchange. See if that's changed at all. New York Stock Exchange. Okay, it's off the highs of the day, but it's still trending. It could pull back the next couple of days. That's possible. Advanced decline percent. Okay, S&P looks okay. Consolidating in a range, but generally moving higher. Mid caps, same thing. Small caps. NASDAQ is the weak link right now. NASDAQ and the New York Fangs. This is the weak link that we need strengthen. Okay, we're pulling back in. Double top. Double top. Okay, so that's what it looks like for the New York Fang Index. We need these stocks to bounce tomorrow, along with advanced decline percent. You can see NASDAQ is lower in the bottom panel. Mid caps, small caps, mid caps, large caps. These look okay.
Steve is our senior economics correspondent. He joins us now. So, how do you think we should be thinking about the CPI?
A little profit taking there on that little bounce.
That's going to really mean for Fed that's going to be out there speaking in terms of the chair himself at Jackson Hole really soon, actually.
Yeah, I don't think, unfortunately, Scott, that tomorrow's report is the be-all and end-all that the market's waiting for. We're looking for a relatively benign inflation report, and that follows the June number that was unexpected, the unexpected decline there that did keep the state nice and big. Here's the numbers you guys are all screaming and yelling about. Just 0.1% expected tomorrow. That's after that unexpected 0.4% decline. And then 0.2 on the core. Those numbers are enough to bring down the headline number, the year-over-year number, 5, 10, 3, 4, and 2, 5 are what are expected. Now, reason why I'm look, I'm going to be very excited when the number comes out tomorrow, but after this CPI report, put on your seatbelt because we've got to go through the July PPI on Thursday. We got the PCE on the 26th, just ahead of the Jackson Hole meeting. September 4th is jobs. And then you get a PPI report, another CPI report before the FOMC statement. So they have a bunch of time to figure all this out. Here's some of the dates.
Okay, so if you're frustrated with the markets right now, just understand that you can see the S&P is sitting here at the highs, not doing what it did the previous week, moving sideways. All right, S&P.
Fed Chairman Kevin Warsh's absolute promise to deliver 2%. So that's not a bad chart there.
Enabling elder impulse. You can see that we have a blue elder stick. This could easily turn into a red stick, which we'll be watching for towards the end of the day. We want that to be green or blue. Blue is just telling you that we're just going to chop around here like we did Friday and Monday.
Because earnings are really, really good. And as long as that...
Yeah, that's the other thing. Earnings have been good.
Anything different. By the way,
and there's not... The Fed won't likely raise rates, not with non-farm payrolls being what they were on Friday. So that's supportive.
So that looks like the right call. And the other thing I wanted to ask you about in terms of this PCE, which we used to describe as the Fed's favorite inflation measure. If I recall from Chair Warsh's news conference, I think he was asked about the PCE, and I got the feeling like he may not think it is the Fed's most important measure of inflation right now, according to him, and how he wants to view that.
Look, I will admit I'm the first person learning to listen to Kevin Warsh, and I'm not sure his message is 100%, and I'm not sure I'm hearing 100%, but here's what I'm learning about listening to Kevin Warsh. There's two things going on now. He has this broad, long-term reform he's trying to do that's going to look at all kinds of stuff like what inflation metrics the right metric. But he also has a ship to run now. And as far as I can tell, Scott, the ship that he needs to run now is operating on the old PCE. And I don't think he needs to change that as the target for what he's aiming for now. The task force may come along and it may be like, okay, that's not the best metric. There's a better metric. Let's get the whole FOMC on board on looking at this new metric. And here's why. I don't think he needs to take our attention away from the old target, to change the target before he's here. He can place absolute fealty to the 2% target. I believe that fealty to the 2% PCE target. And I think he wants to change that. I think he needs to talk a little bit about more separation between what's long-term and short-term. But having gone back to the grant what he said, I think that's what he's saying.
All right, S&P, we got about 47 minutes to go, 46 minutes, 30 seconds to go. We're trying to continue. S&P putting in a higher low now. S&P with a higher low. Looks like we might get a little levitation here. Okay, here we go. Starting to look a little better. Chop back and forth. If you were short into this low, congrats. I chose not to trade it. Was a good trade though. VWAP down and to the right. I doubt we get right back up to the VWAP, but I could be wrong.
That it's going to come before that he would advocate. It's not his decision solely. He would advocate for rate hike.
So to speak, you don't need it. So to speak, you can have a 4% along the
Was the chair going to be the center?
Yeah, maybe. It's happened before Volcker got outvoted. So it, who knows? Yes, I think if I had to make a decision, yeah, I probably just want to raise rates before the midterms. At the same time, I would also say I'm not sure the economy needs a rate hike right now because there's to the point about the debate very quickly about what's the right measure of inflation 6 months from now. There's tariffs, there's oil prices, there's AI demand. All three of those, as Steve said explicitly, with respect to AI demand, are interest rate insensitive. Raising rates is not going to fix Strait of Hormuz. Raising rates is not going to make Google any less likely to invest, et cetera, et cetera. And so what percentage of the above target inflation is purely demand driven, and how much do you want to raise rates to try to bring that back in? That's the debate that's going on.
Okay, so hold on one more time because we want to talk about the financials now. They've been on a tear. Today, it's the private equity names that are especially strong. That sector, the financials, going for its 11th straight up week. Leslie Picker has been following this, as you would expect, and joins us with more.
Yeah, that means it's on pace for the longest weekly winning streak for financials ever, if it notches gains this week. So today's big gains, as you mentioned, largely driven by the alternative asset management. AR about 6.5%, Apollo up more than 6%, Blue Owl up 5.2%. The group has been rallying quarter to date, helped in large part by earnings over the last few weeks that probably came in better than feared. As Goldman analysts point out, the group saw record 2Q fundraising and earnings revisions have stabilized, and the multiples are still trading at a discount to 5-year averages as well. So there's some optimism that the wealth flows are reaccelerating after tremendous volatility, as we've been reporting on this show over the last year. Additionally, the market is paying more attention to the role that these managers are playing in the AI financing boom, as made evident by yesterday's announcement by NVIDIA, make its chips and compute a financeable asset class with the help of 6 private markets firms. Scott.
Yeah. Shoulder to shoulder with Jensen Huang on this air, which was extraordinary in and of itself. Leslie, thank you very much. That's Leslie Picker. Liz, I bring up the financials for as much a reason as to show that there's a lot more going on than just the AI trade. I know the two are tied together in some respects, but nonetheless, the broadening of the market has been pretty remarkable. The equal weight has been at or near record highs. There's far more going on here than just tech leading the show.
Thank goodness, because for the longest time, everything was so concentrated. We were worried that one misstep in tech would take everything down. And now here we are with financials, which I talk about a lot as confirming a rally. I want to see financials take part in that, and that's happened already in the market. Now we've got earnings for financials, and we're looking at a market that's driven by earnings strength. Financials is one of the places where you get the most bang for your buck. I mean, these companies, all different kinds of financial companies, are earning in a very strong way. You've got big banks that have looked through a flattened yield curve and didn't get the benefit of net interest margin for most of the year. They're okay. We've got diversified revenue streams for a lot of these financial firms. We've got pickup in capital markets activity, even without some of the IPOs that we were hoping for later this year. And now if you've got private equity, private debt companies coming back after being beaten down and left for dead, this is all a good sign. It's a good cyclical sign for the economy. It's a good sign that credit spreads have stayed tight. because that's something that we also need to watch in financial markets. And it's a good sign that earnings are coming in and backing it all up with fundamentals.
Russell 2000, nice today. It's green, right? Big caps, small caps.
All right, watching S&P for a little run here.
A couple times when you look at the
All right, New York Fangs.
industrials, impacts materials, almost everything.
You look at Steel Dynamics and Nucor.
Yeah, it's been amazing.
Materials have been amazing. You can go sector by sector and see thematically. You look at Amgen over in healthcare. There's a lot of healthcare technology going on, but not necessarily Amgen. There's a lot of names that are doing very well.
Yeah, you couldn't have the earnings. They brought it down.
Well, because the economy's doing fine, the consumers doing fine. You couldn't have said that this entire.
Okay, Rocket Lab looks good.
That's the thing, is that earnings now.
Okay, Rocket Lab.
14%, the average sector. So it's far beyond just tech. Tech looks extraordinary relative to that. But, let's not hate on the other stuff that's really starting to look pretty good. And estimates there are going up too.
Right. Well, and that's the thing. It's a revision story too. It's not just that earnings have knocked the cover off the ball on what's happening in the rear view, but revisions continue to rise through a number of different sectors. And you're seeing the rotation that we saw start to take place as semiconductors still have strength. And you're seeing sectors like healthcare, we talked about financials, come back in and really carry their weight. That's what we need to see in a market like this. And even energy really punching above.
There was a note to that regard today. Earnings are not just like blowing away expectations. The forecast continue to go up by large magnitudes as well. That's exactly the story that you're talking about.
Which is why you start hearing people talk about a bubble in earnings. Are our expectations too high? Is that going to be a problem? And at some point, perhaps, yes. At some point, maybe there needs to be a little bit of rejiggering in some of these tech earnings. CapEx needs to slow down. Some of the growth rates will slow down. But that's a natural part of a cycle. That's a natural part of maturing through a theme.
Okay, SpaceX starting to turn. SpaceX starting to turn.
Jump on this bus, and hopefully you're already on the bus, and stay aboard.
Real quick.
To paraphrase real quick.
No, don't say it.
What?
Do you have anything else to explain?
Yeah.
I'm going to say that?
I was going to say.
I knew you were. Scott and I were. That's why I said don't. See you again soon. Dan Greenhouse, thank you. Liz Thomas, thanks as well. All right. Now to that foot pain from On Holdings after its earnings. Not the only name in that arena looking sore today. Brandon Gomez here with more. So this stock is having the worst day ever, but there are others as we followed today that are getting hit as well for a variety of reasons.
Yeah, call it in sympathy, but honestly, it's a case of two left feet for some of these companies. On Holdings cratering 20% after Q2 results came in mixed. The company reducing full-year revenue guidance. Brian Melsky, though, holding strong with you this afternoon, flagging apparel up 48% and DTC up 26%, saying you own On Holding for the apparel. Well, then you have Under Armour falling today on some analyst downgrades. Barclay downgraded the stock to underweight. The firm citing delayed brand recovery, a competitive sector, and what they call the macro-related consumer malaise. Now, that after the sportswear brand said traffic trends have weakened, especially in North America and the Asia-Pacific region, cutting its revenue outlook for the year. And then you have Dick's Sporting Goods also falling. Hasn't been trading well lately. The pullback comes one day after the Wells Fargo upgraded the stock to overweight for paperweight, raising its price target to 240. Wells Fargo called it the best way to play a Nike recovery. Earnings are on the docket for August 25th, so we'll wait till then to hear more stuff.
All right, good stuff, Brandon. Thank you. It's Brandon Gomez. Let's send it to Christina Partsinevelos now, who has a look at the biggest things moving into the close today. Hi.
Scott, well, let's start with shares of Chinese music Tencent, because they're dropping 11% right now. Despite strong quarterly results, revenue rose 6% from a year ago, partially thanks to its acquisition of the podcast and audio platform Himalaya. Music-related services was the key growth driver, while revenue for social entertainment services, there you go, fell 16%. Shares of the location tracking platform Life360, sinking as well, did keep its full-year guidance unchanged. Adjusted operating earnings beat estimates, but analysts just attributed that to a one-time tariff benefit and timing of increased costs. Monthly active users are roughly in line with estimates as well, and that's why shares are down 27%. Joby shares falling after it agreed to buy the defense tech company Resonant Sciences for about $500 million. The acquisition gives Joby an established defense operation
alongside its existing aviation and air taxi initiative. Shares are down over 4%. So much credit. It's coming.
I appreciate that. We'll come back to you in a little bit, Christina. Thanks. We're just getting started here. Coming up next, big moves in the AI race to go public. Anthropic reportedly looking to shore up investor confidence as OpenAI loses a key executive. We have those details coming up. Plus, we'll hear from early Anthropic investor, notable Capital's Jeff Richards. We're live to New York Stock Exchange. You're watching Closing Bell on CNBC.
All right, the S&P continues to rally up a bit. Rocket Lab looking good. Rocket Lab. Okay, Rocket Lab looks good. Okay, SK Hynix back to opening range high. SK Hynix with 34 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, August the 11th. I hope you're having a good day. It's kind of boring like yesterday. To be expected. The range is pretty tight. My son's out on the golf course, having fun with his friends. Cool. Good. Legends is over there, huh? Okay. All right. Okay, S&P trying to make higher highs. Just feels like shorts covering. Let's see what Trace is saying. Okay. Charm. Okay, could see a little, probably a pin right at 77.35 or 77.45. Okay. Charm usually shows you where you could expect prices to close in between those nodes. Right in this little area right here. Okay, 77.35. And if I go up to this level, these little bubbles, look for prices to pin between these bubbles. Okay, so it could pin above this or below this. You can see where hedge flows are headed. That is pointing towards this little node right here, these two nodes. Okay, it looks like we're going to pin there in this area. SK Hynix, nice bounce. Okay, let's see what's Core 1M is almost 9 now. So this is developing, looking very good.
something new you just announced today. It is the latest shakeup at that company. PG Simo stepped down earlier this year. She was another top executive to a chronic illness.
Okay, good stuff, Kate. Thank you. That's Kate Rooney. Now let's bring in Notable Capital's Jeff Richards. He is an early investor into Anthropic. It's nice to see you again. Welcome back.
Great to see you, Scott. How are you?
Let me ask you first off, well, thank you, about the OpenAI news, the Brad Lightcap news. Are we to assume that the fact that OpenAI initiated this tender is going to lead to more potential departures from important people because now they finally have the ability to monetize some of their time there?
It's a great question. You know, companies like SpaceX and OpenAI, Databricks, Anthropic have been doing employee liquidity rounds for years now. It's become a fairly common thing in Silicon Valley. It does, you know, we do see quite the entrepreneurial ecosystem growth because of it. So for us as venture capitalists, it's an exciting time. You got a lot of phenomenal people that are spinning out of these companies 2 or 3 years in their life cycle. It's a great question and just probably something these companies have to deal with as they grow and they scale. And obviously we've seen value creation in Anthropic and OpenAI, but frankly just never seen before in Silicon Valley.
I mean, especially I suppose, as I asked the question, I think about the fact as well that here we are talking about Anthropic head closer to going public while we don't really think that the OpenAI event is going to happen in calendar year 26. So one heads, you know, out the door soon and the other one we're not so sure. Thus maybe the willingness or the desire to utilize a tender rather than wait around to see whenever the company decides to go public.
Well, we'll see what the timing is for both companies, Scott. I think the thing that is also worth mentioning is there are a ton of great companies beyond OpenAI and Anthropic that are in the AI sector here at Silicon Valley. They're doing phenomenally well. Many of these companies in 3 or 4 years have grown to 500 million or even $1 billion of revenue. You're talking about companies like Vercel, Base 10, Foul, Fireworks. You know, these are the next Cloudflare, Palo Alto, CrowdStrike, Snowflake. These companies that have grown over the last 5-10 years from 10 to 100 billion in the public markets. There's a whole bunch of those companies coming beyond OpenAI and Anthropic. And not to diminish OpenAI and Anthropic, they're 2 of the greatest technology companies ever built. And if you just think about the IGV, which I know you guys follow very closely, and most of your listeners do as well, which is a software ETF, the combined revenue for all the companies in the IGV outside of Microsoft and Oracle is about $140 billion a year. So we're talking about 2 companies that in under 5 years have grown to about the same size as the entire IGV ETF. These are really important companies, but there are a whole host of other great companies that are coming along and hopefully they'll go public in the next 6 to 12 months as well.
So as an early investor into Anthropic, I mean, how are you thinking about the coming IPO and how you think it would be received within the marketplace, given that, okay, SpaceX went first. We obviously know what's happened since, and that this one looks like it's going to beat OpenAI out the door.
Well, the really interesting thing to ask is, you know, if you wind back the clock to 2021, we had 26 software companies that were growing at north of 30%. Today, we only have 4. Palantir is an obvious one. We've got a few other companies in that mix, but the market is starved for high growth names in software and technology. Obviously, people have been betting on the hyperscalers for years now and NVIDIA, but looking for new names that can grow at a super high rate. So we don't really know, nobody really knows how will the market value these companies. Those companies growing at 30% are generally trading about 30 to 40 times forward revenue, and Palantir trades at 60 times forward revenue. So I think the big question, Scott, is how are these companies, not can they go public, they can certainly go public. How are they going to be valued? Are we going to comp them to the 30% growers, even though they're growing much faster? Or are we going to create new multiples and create this whole new growth ecosystem in software and tech over the next 12 to 18 months? It's going to be fun to watch.
Sure. What about the others that are in the pipeline? I mean, how do you think they're thinking about coming public when you're going to have this massive supply event in a matter of, you know, a month or 2?
Okay, looks good. The market's responding nicely. Okay, a lot of stocks turning back up.
Over the last decade, and so it's gone from 100 billion a year to 500 billion a year. This year will probably eclipse 500 billion. But a lot of the investors in those companies already are public market or crossover investors. You've got folks like Wellington and Fidelity. You've got hedge funds like Brad Gershner and Altimeter and the Cotu folks. And
a whole host of other folks. So a lot of these companies have great shareholder bases that have bought into these companies in the last 24 months and plan to hold them for the next 5 to 10 years. You've obviously got the early shareholders, the seed investors, the Series A investors who might be looking for liquidity and employees. But I think what you're going to find is a relatively sophisticated cap table for a lot of these companies. And part of the reason they do the tenders as well is to clear out some of the early investors and create a more stable shareholder base. So when they go public, there isn't a ton of pressure inside of selling, and you have more long duration shareholders on the cap table.
All right, we continue to rise here. S&P looking better.
Yeah. Curious what you make of the comeback, if you want to call it that. Whether you think it's durable, whether people were too quick to declare software dead, all the above.
Well, I think a lot of us were quite perplexed at the quote unquote SaaS apocalypse in Q1, just because it was really a case of throwing the baby out with the bathwater. You had seat-based software being valued or going down at the same rate that cloud infrastructure and cybersecurity were. And what you've seen, obviously the IP I think was up about 20% year to date, but you've got individual names like some of the ones that I mentioned, Cloudflare, CrowdStrike, Palo Alto Networks, Snowflake, these infrastructure benefiting from AI that are up over 100% in the last 90 days, some of them 120, 30%. So I think the market has sort of figured this out and gotten it right. And obviously you saw record growth for the hyperscalers from Google and Amazon in the last 30 days as well. So that, to us, that Q1 was a little overblown, and now the market's starting to get back into a group where it's valuing the companies that are clearly winners as part of this AI trade, and heavily tied into the growth of the companies you mentioned, Anthropic and OpenAI, and benefiting from all the CapEx investment the hyperscalers are making. Folks like NVIDIA, AMD, others that are leading, Broadcom, that are leading on the charge on the infrastructure side. And then, NVIDIA's announcement yesterday to partner with the private equity firms, put another $500 billion into this market, certainly helps to answer part of the question of, can we fund all this demand? Today, we're compute constrained. There's more demand than there is compute. Obviously, what we need is both regulatory cooperation to build more data centers and more compute, but also the funding to do so. And I think that was a big step forward.
Yeah. Maybe we're attempting to find some kind of equilibrium in the software arena, and we're getting closer to doing just that. It's good to see you as always. Hopefully next time out west. Take care.
Thanks, Scott. Look forward to it.
Yeah, me as well. That's Jeff Richardson. Coming up, another big money bet on sports, and this time it's one of the world's richest that wants in on the game. Alex Sherman, following that money, joins us next.
Okay. S&P is still climbing. All right, we got 22 minutes to go. All right, S&P is still climbing. S&P is still climbing, looking pretty good here, actually, with 20 minutes to go. Just sitting here waiting for the markets. See if we can get any kind of follow through here. Okay, Rocket Lab's hanging out near the highs. Palantir looking okay. SK Hynix back to opening range highs. Same with Intel.
A new report says Jeff Bezos is close to buying a piece of the Liverpool Football Club. CNBC Sports' Alex Sherman has more. What do we know?
Hey, Scott. Yeah, CNBC has confirmed that Bezos is part of a consortium that's interested in buying about a 30% stake in Liverpool. CNBC Sport valuations value Liverpool at $6 billion, the fourth most expensive European soccer team. But, you know, the deal got me thinking that it's interesting that as the valuations of all these sports teams have gone up, the wealthiest men in the world, men and women, don't really own majority stakes in any of the major American or international sports teams. I mean, if you think about Elon Musk, think about Jeff Bezos, think about Michael Dell, the Google co-founders, none of them own majority stakes in a U.S. or international sports franchise. And it comes at an interesting time as the valuations for all of these teams rise, and there can be fewer and fewer buyers for it. So let me turn the tables on you, Scott. Why do you think that is?
No, I mean, there's Walmart money now in the Broncos. People thought that, Bezos maybe.
All right, we got 15 minutes to go. 15 minutes.
Instead, it's a really good question. I don't know the answer to that.
Yeah, the Waltons stand out. Like you said, they bought the Broncos in 2022. That's just a 2 years old, and it's been a small portion of their mass wealth. Thinking about a variety of different possibilities. One, very simple. Maybe a lot of these people are not.
All right, we're pulling back now. Shit. Okay. Thought we might get more of a follow through.
And it's possible that the world's wealthiest people simply want to spend their time doing something else. The fun of everyone. My guess that negative positive championship. So it's certainly possible that that's bad. Why people are buying it might not. You might notice mistakes go and that's
Reporting. I guess all the reasons too. We'll talk more soon. Alex, thanks, Alex. Back after this.
All right.
Shaping the market. This is Schwab Network. Side of SchwabNetwork.com. Stay connected to the markets. Today, 7 days for Schwab.
Okay.
Invest your way with Schwab. Welcome back to Market Buzz with Sam Ball. The stock exchange is now time for a little stock food. Today after a 30, so just discuss is the Jeff Analos, Director of Regional Running theme on this show this afternoon. We've spoken to the infrastructure debt private credit guys. We've spoken to the commercial real estate guys about data centers. And now we're talking about a company that is offering the so-called human infrastructure. Needed for human capital.
Sure, Sam. So market think about it. They do concession stands at ballparks. You can't find them with that's fine as well.
Got a little bit more than 10 minutes to go. Cerebras trying to push a bit higher. Cerebras has earnings tomorrow after the close.
Their retention records are near their retention numbers are near bucks. They're 98%. If you think about that, how many companies can retain 98% of their client base? It's not an easy thing to do. So because of that, they raised their organic growth guidance to 9 to 10%, from an earlier estimate of 7 to 9%. Now, roughly 65% year to date.
Exactly the competition is here, because you and I were talking about another company last week, was it US Food, who sort of seems to be like in the same business here as well. But it could also sort of break down the Nexus part, which seems to be driving a lot of investor excitement today as well.
It is, yeah. Their two biggest competitors are Compass and Dexo. Compass is about 2 times Aramark size. Dexo put it about 1.5 or so of their size right now. So they're much bigger players, which makes Aramark a little bit more nimble and ability to move around right now, especially as far as these hyperscalers. So what are they doing differently than Compass and as Dexo are doing? They are actively pursuing the ability to be the on-site provider at AI data centers as they're getting built out. So when you think about that picks and shovels narrative, a lot of people remember the idea of the picks and shovels. So I remember his name, but I know it's California Million. The best though during the gold rush wasn't the person that made the picks and shovels. It was the person who made the jeans that all the miners were wearing. That was Levi Strauss. Aramark, I think, is going for a similar angle, because what they want to do is they want to be the provider on site for all of the engineers in the middle of nowhere as they're building out the facility. These are higher margin contracts, Sam. They're able to provide things like facilities. They are making money in their sleep, Sam.
It's so interesting, isn't it? And you just wonder about the durability. I mean, I've been speaking to a couple of guests here today, which, seem to think that, we're in this for the long run. I mean, you've had Jensen Fund coming out today, he's got new check writers from, some of these Wall Street firms. I mean, this is just the beginning as far as the analysts are concerned with this whole build out. But how cyclical does it make this kind of business?
All right, pulling right back, broke that trend. So much for that. Okay, it looked like we might do something in the day. I guess not.
But if you start to look at the Q4 earnings announcements, and hey, what are you thinking about this? Q1 of 2027, are you still rolling these out? Because right now they have this one data center that they're working with in Texas for the second being. If you start to hear, Sam, that maybe we aren't getting the contracts that people are looking for, they said they had a pipeline during this earnings announcement. If those don't materialize, rather, they are probably going to have some headwind that can really push the stock down, and in a meaningful way, as people say, hey, might be this bubble bursting.
All right, at least for now, it's a nice breakout for shares in ALK right now. I really appreciate it, Jeff, as always. Thanks for jumping on with us. Molly, I'll send things back over to you in Chicago. Thanks so much to Sam and Jeff for that one. We are nearing the end of the market session. Alex Coffey will be joining us to break down today's action. And after the bell, going on earnings from CoreWeave, Super Micro, and Blue.
Oh, that's right. CoreWeave has earnings. CoreWeave, let's see what CoreWeave looks like. You got 6 minutes to go. CoreWeave. CoreWeave. Okay, it's over here. CoreWeave. Risk reversal 99%. Selling call spreads makes sense. Risk reversal 99%. Core weave.
Schwab gives you round-the-clock access to over 1,100 of the most popular ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. Now that would be our. You can trade till
Core weave.
And I'm getting more. This is investing, which back to trend shaping tomorrow's market.
Protect that energy, crypto focus on what's driving investor sentiment.
Clear analysis and forward-looking market coverage every trading day.
This is a favorite level.
Okay, what's the expected move? Core weave. If you're going to do this, I don't have enough time to do it, unfortunately. I'll pass on core weave, but let's see, what do they got? Expected move, 11%. So I would go 15 deltas probably.
Level up and invest smartly.
Morning. The biggest headline today. Analyst call. Get your watch list ready. 8 a.m. Eastern. Morning only on Schwab Network. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning movers bring traders the biggest headlines to start the day. From volatile overnight space to the earliest analyst call. Get your watch list ready. 8 a.m. Eastern.
All right, coming into the close. All right, a little bounce here. Gonna make it a little bit more difficult. Okay.
Subscribe free at schwabnetwork.com.
Sometimes, you know, you could have done that. Same goes for where you invest. Level up and invest smartly with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Here on Lock Roll Cars, I'm Sam Bonus on the floor of the New York Stock Exchange alongside Molly Caden over in Chicago headquarters. Just a few minutes left now in today's session. That's what we've been Alex talking to Next Gen Investing's top part about the day. And Alex, it felt like a kind of pro-home session today. It was a bit of a wait and see tech market of the big tomorrow.
Yeah, it's really the name of the game as we really, I would say, kind of locked in for the better part of the last several months.
I got 2 minutes, 30 seconds to go.
The S&P 500, since then, it's been a whole lot of nothing for the market, but it has been an eventful, several sessions leading into that. So it's not uncommon. It's why, in technical analysis, for those who follow that, whether it's Ben Watson or Rick Ducat that are on our network or any of the guests externally that come on, one of the patterns that's often talked about is this idea of the bull flag, or really just any type of flagging pattern. And it's this idea of this large vertical phase within markets, and then sort of the consolidation period as that new price level is absorbed by the market. You could make a case that we're sort of in one of those moments where we're just sort of flagging. And
Okay, not much to do here.
As far as today is concerned, today was really a story of the Mag 7. We're down about 30 points. You can do the math, and it's basically a 30-point drag by the Magnificent 7 stocks today as Apple, Amazon, and most importantly, Alphabet are making rather substantial moves to the downside, dragging on this market today. NVIDIA and Tesla, the lone names to the upside, just not enough owns behind those moves to offset, particularly the drag from Alphabet, which is about half the lower today for the market in terms of the points move of around 30. Alphabet's a drag of almost 15 on its own, so pretty significant. I did send the team over a chart, though. I think this puts in perspective
kind of the story of the last couple months, which is we've been talking about this divergence between check writers, check receivers, hyperscalers, AI infrastructure. I use AI semiconductors here, represented by that orange line. And the story for the first
50 seconds, 45 seconds.
used to move in tandem to the upside. You then had a situation where they diverged, but it was the hyperscalers.
Okay, Rocket Labs still going here. SK Hynix breaking out. End of day, SK Hynix is going. SK Hynix.
Both these trades are pretty unchanged as those start to come together, and the AI hyperscaler names, so your big spenders, your Microsoft, your Amazon, your Alphabet.
SK Hynix, nice follow through. 10 seconds.
Markets pulled back, but the fact that you start to have hyperscaler stocks perform better on a relative basis.
All right, that's a wrap, folks. I'm your host, Cousin Benny, coming to you from closingprint.com. I'll stick around for CoreWeave earnings, but I got a hard stop after that. Unless it is delayed, in which case I'll drop off. Have a great evening. I'll be here listening for CoreWeave earnings. SK Hynix closing at the highs of the session. Microsoft managed to bounce. So did Tesla. Apple off the low of the day. Amazon looking for a follow through tomorrow. S&P bounced off the lows of the session. 77.15 GEX held. Okay, so I'm just going to take the mic off. I'll be sitting here watching the markets.
Chips are winning on the day. Like today, obviously we've had some Nvidia news, couldn't hold the gains, but all in all, semis have been winning on the day. Here are your closing bells for this Tuesday afternoon. So we closed out the session pretty mixed, but pretty range bound, as we mentioned. We were looking very directionless, a similar story to yesterday, basically. Coming into this session today, we saw a little bit more of a pullback as oil prices ticked higher throughout the course of the session, but basically the S&P, the Nasdaq, and the Dow Jones all finishing around similar percentage points, down around 0.3, and the Russell 2000 basically doing the same thing in the opposite direction. Interestingly, as we did have yields backing off going into this CPI print tomorrow. That's going to be obviously the big one everyone's looking out for. We did see that rotation back into chips, into hardware, them winning on the day as far as softwares were concerned. They were lower. We had obviously some downgrades for Plummet, for instance. That was a stock which dragged them down 6% to close. Mid session across our Mag 7 as well. In fact, Nvidia, which obviously was flip-flopping for most of the day off the back of this major announcement with some of the top Wall Street financial institutions here, the top names didn't manage to hold on to the gains, as I mentioned, just on the flat line to the downside. Meta was higher, Tesla was higher, but the rest were underwater on the session. Looking across some of the sectors today as well, industrials had a very strong start out the gate. They obviously came off the highs of the day, but this was very much a standout. Alex and I were talking about this one earlier today. It seems to be obviously a big beneficiary of the macro component, the backdrop sort of holding up. You've got geopolitical tensions, while things don't seem to be spiraling out of control. Things seem to be hanging in there, at least for now, as well. And then, of course, it's become a sort of adjacent AI trade, which is helping too. Technology was lower, so was top services, discretionary and staples. In fact, there was still bright spot, that was utilities, which was up over 1%, as you can see here. Materials also put on a fractional gain there as well. So as I mentioned, they've become sort of the backdoor kind of technology trades, as we can see here. Real estate was down. Got some existing home sales out today. It looks like, these higher mortgage rates continue to weigh on things. And just flipping the boards, lastly, we did have energy picking up the outperformer on the session as well here at 1.3, as those oil prices ticked higher as well. Financials flat just on the line there. Healthcare was lower after that high we saw yesterday for that sector. So we're waiting for a number of earnings here. Momentum going to drop any minute now CoreWeave, Supermicro. But before we get to those, Alex, it just feels like, as you mentioned, we're digesting a lot of what happened last week as we await for this next big catalyst tomorrow.
Yeah, if we go back to that chart that I said, guys, I think what the most fascinating thing about this to me is this is a 3-month period of time here. This is indexed to 100. So the fact that these trades not only diverged and came back, but basically came back to unchanged. I know we talked about this idea of mean reversion, but the reality is in financial markets, there is not price mean reversion. So this is an anomaly in itself. I think most importantly, what we should take away from this chart, though, is really going back to, I would say, the middle parts of last month. So almost a full month ago now, is that the correlation between the two trades started to recover.
Let's see what CoreWeave. CoreWeave.
Where the AI
Okay, looks like we got a nice little pop.
were moving in the same direction. I think that ultimately
The numbers out yet? I don't think so, right? No, the numbers aren't out yet. CoreWeave.
for S&P 500 as well. When it comes to all of these names we're going to discuss today, the biggest question is going to be, what is the positive surprise? So many of these names, Momentum in particular, they have no issue with demand. They have an issue being able to meet the demand. It's been the same story for the memory names. And a name like CoreWeave seems like the narrative until we hear from them is nothing but positive. But this is a company that's had 5 quarters that it's reported, and all 5 of them have been negative, with the average move being almost 14% to the downside. So trying to rewrite a little bit of history here and maybe break that streak.
All right, we've got earnings here from Momentum just coming across the wire right now. So let's get to these. And we'll start with the revenue numbers. It's their fiscal 4th quarter revenue coming in at 1.01 billion. The estimate is looking for 990, so better than expected. They're also up more than double from the 480.7 million in the year ago. Components and parts revenue coming in at 649.4 million. Better than the year ago quarter, also better than the expectation, looking for 636.9. Systems revenue coming in at 356.9 million. That's also better than the expectation, looking for about 350. Gross margins coming in about 47.4%. Street was looking for 44.3, also a significant improvement over the 33% from the year ago period here. Now, as we look ahead to some of their projections here, they are projecting for their first quarter revenue of 1.225 to 1.275 billion. That's well above the consensus, looking for 1.15, and it shows continued growth from this quarter they just reported. Their operating margins are guided to be between 39.5 and 40.5 here. Non-GAAP diluted EPS expected to come in at $4.05 between 4 and 4.35. Prior consensus was 3.58 here as we look across these numbers. So they've more than doubled their revenue year over year. They've come in well above the expectations in terms of their guidance here. Their EPS coming in at $3.23, better than the 2.97 to 2.99 that the street was looking for here. And yet we are seeing about 1.5% move to the downside. So Alex, what are you seeing here in Momentum that is that the street is digesting right now, leading us to move negative?
Yeah, well, let's start with what we know in the numbers. The numbers are really positive, as was expected. You're not going to poke apart this story, but the question I asked as we were about to break the numbers is, what is the positive surprise? So, I had a guest on NextGen today, Corey Johnson, and we discussed Momentum. And every single thing Corey said was extremely optimistic about the company. But when pressed about the stock, it's, well, I don't know how the stock's going to perform, because what's going to be good enough. I'm a firm believer in 2 things when it comes to financial markets. One, that surprise is what moves the markets, and ultimately things the reason technical analysis works, if it does, and there's so many followers of it, is that it's about pattern recognition. Well, the pattern right now is that there's nothing these companies can say that is really being enough for the market. It's because sells what it says based on Bloomberg's basically compilation of this. The entire street anticipates this. So if we're all expecting really strong numbers, there's not really room for me to be surprised to the upside. Now, they could have, but you have this other side of the equation, which is they have supply chain issues
to actually meet the end market demand. So it kind of limits that right tail, that positive surprise at the upside. And so right around now in earnings, when it comes to these AI infrastructure names, there's a lot of asymmetric risk to the downside, and we've seen that in the reactions.
Yeah, and right now we're down about 2% momentum, but I want to switch over to Super Micro. I highlighted them yesterday with Sam as potentially one of the more interesting earnings reports because they had already gotten out in front of a potentially lower than expected revenue number here. So let's take a look at these numbers here. We are moving to the upside 10% already on their fiscal fourth quarter numbers. EPS coming in at $1.70. The expectation was for $1.59. So we've got a beat there. Net sales coming in at $11.12 billion. Now that is below the $11.26 billion the street was looking for, but it is on the lower end of their guidance range, which was $11 to $12.5 billion that they said they would be in. So they are in range. Margins, though, this is where it really mattered. They doubled their margin projections, saying it'd come in between 15 and 17%. They're coming in above that at 17.6% for their adjusted gross margins for the fourth quarter. So that was really going to be the story here. Net income coming in at $1.18 billion as well. As we look across their first quarter and full year outlooks, they're guiding for first quarter EPS of $1.01 to $1.10. That is well above the consensus, looking for 74 to 76 cents. Their net sales guidance for the first quarter looking for $14.5 to $15.5 billion. That's significantly topping out the consensus, looking for right about $12 billion. And they see their fiscal 2027 net sales of $65 to $72 billion, which is far exceeding the consensus, looking for 54.43 here. So we are looking at a significant jump for Super Micro, which was coming in with this very interesting setup of potentially higher margins, of potentially slightly
Okay, core weave looks like it's going to be down here.
if they
Looking for earnings.
receive that $60 billion they disclosed in the last quarter into returns and profitability and maintain their margins. And it looks like they have that.
Yeah, this seems to be a story of the net sales guidance, not only for the first quarter, which is 25% above the consensus. So this is real surprise. We're talking about looking for surprise. I mean, 25% is massive in terms of a positive surprise. If you do the math for the full year 7 net sales, they anticipate this to continue out through the entire year. It's 25% above forecast there as well. So now the next hurdle for Super Micro and ultimately its investors is, okay, actually deliver that. So strong report and one that had some positive surprise, looking for.
Yeah, and Sam, I know we had talked about Super Micro yesterday, and I had hinted sort of at this interesting setup, but I know you've had conversations and read many notes about what everyone was looking for here when they sort of lowered the bar on themselves, but then set up a real margin beat for themselves. They achieved that beat. They came out above the expected range, which was 2x their previous guidance. What do you expect the questions to be on the call here?
Yeah, just going back to what you and Alex were discussing as well. I mean, I guess given the positive reaction to the preliminary update, this is really a guidance story because everybody was wondering exactly what they would say in that newly updated outlook as to whether that was going to be sustainable or whether that was a one-off. And I think that very much.
Okay, pulling back some more. All right, so it looks like core weave is going to be lower. All right, folks, take care. We'll see you tomorrow. Ciao.
As you say, I think some of the